Check 1, 2. Mic check. Channel. Waiting room. Yeehaw. Back. Good morning, baby. Making some money right now. Yeehaw. Got a bunch of 410Ps. I'm going to close them out right now. Right. Done. What do I got here? What's going on? So I had some 410 Ps overnight. I just closed them just now. There's possibly some more down to go here. I held them a little longer than I expected. Let's see here. I got a couple things I got to do here. Newest customization. Mainstream live. Just so you can see here, this dip might get bought right now. I just closed out some puts that I held overnight. There's likely more down to go here. We'll talk about that in just a minute. But the overnight trades, I like 0 dates for me are directional. Like if you're in like a month out put or something, you're holding them. I understand that. But a 0 date for me, they're as good as a direction. They go like I bought them I think at 34 or 35 cents. I sold them at 68 cents. Hold on here, just a second here. I think I got all that right. Save. Good morning. Yeah, you just covered some shorts. Yeah, I just closed puts, bro. I'm happy. So, like, I did good. I did good towards the end of the day. It wasn't like a stellar day yesterday. I could have done much better. I should have stuck with my original plan yesterday, and I changed one of my rules. I was having a talk with a friend and changed one of my rules yesterday, and that happens. So, but I did well yesterday. But this morning, I'm fucking good. So, those puts overnight were fucking awesome. Excuse my language already. I'm like 5 seconds into the stream. So I'm just happy, stoked. Week is going well so far. That's a lot of stress off my back to make sure that I'm, up on the week. I don't like whenever I get down, so I pretty much am the type of person that's week by week. So if I rate myself like, did I have a good week? Or like, how about this? If I break even, I'm never happy. I'm upset. I shouldn't be, because when I have a losing week, I'm really upset. I get really, really down on myself, pissed off. And when I look back on my week, like a trader log, it's always like being sloppy. I was talking to a buddy and I was like, when you see me sloppy I was like, I'm trying to be, I don't have to, but I stream a lot. So I'm not always going to be 100% on the game, right? Like there's going to be like 10%, 20%, 30% of the time where I'm tired, hungover, went out partying, went golfing, did this, did that. And I still will trade with you guys, and I will lose fucking money, like pretty bad. And I don't pick the days that I trade. Every day somebody wants to trade, so it's kind of like what this show is. And it's made me a better trader overall. You know, become a better trader by trading every day. So, like my ability to trade is like what used to be and what it is now. I used to only trade the best days, so I've become a better trader. But in line with yesterday, I was up, then I was down, then I was flat, then I was slightly up, and at the end of the day, I closed up. This morning, this open, it's a good week. And it's only Tuesday, so and I can scale back, scaling into trades too. Like I don't have to worry about. I'd have to make like 2 major fuck ups this week to have a bad week. So I'm happy right now. Okay, so the one thing I want to say today is we're in a tight ass range today. I need you to know that. Now, when we are in these tight ranges, recently we've tended to trade outside of them. Fascinatingly enough, we've tended to trade outside of them. We've had less propensity on expected moves of actually going 1, 2, 3 pivots, like up or down. It's been rare, but when the range is expanded, our trading range, it recently, whenever we've had we've had days where we have a tight expected range, tight pivots, we tend to make some pretty strong moves. Now, I'm making that statement, but even with that said, I'm not expecting a hell of a lot today. 40908. This is the daily trigger down here where this yellow bar is. This is the DT right over here. Daily trigger. The one positive thing for bears is that we are under the hourly trigger. So maybe we can get some bleed off into the end of the day. Maybe we can send this down here. Does that make sense? Something like that. You see that over there? Like something like that into the end of the day. Maybe you get some kind of a weakness into the close today. That would be the hope if you're a bear, what you're looking for. I don't know if that happens because the range is so tight. Like, this is what's been happening. But under normal circumstances, I would say, no. We're going to pin this just like yesterday. It's going to be a bunch of bullshit. End of the day, 11:30, 1:30 in the afternoon, maybe you'll get a move. People that are protecting themselves into this scheduled volatility. Or we print these lows and we don't get the actual volatility. So, like there's a part of this recently that I've noticed too. Another thing that I've noticed is we're not getting the bad news. And someone's already positioned short. i.e. a bank, an institution, sell side. And they just don't fucking care. They're like, I'm getting my money. So I've seen a lot of that recently. It's like I keep calling it manufactured volatility. It's like, okay, what we're going to do is we got no real vol, so we're going to schedule it, and we're going to make it happen. It's kind of like, it's not the kabuki theater side. It's the market can't just go up, and the market can't just go down all the time, like one straight line. So maybe we get the move today. It'd be nice if we got because the market is hedged out crazy on Wednesday, Thursday, and I think even Friday it's like Wednesday, Thursday, and then Monday or Tuesday. It's hedged to the gills. Like there's so many puts on the market. I'm like, man, if we're not hedged on Tuesday, maybe we'll get the move down that we're looking for on Tuesday, and the move is actually over, or at least in cash market, it's over, and then that maybe that'll provide some fuel on. We'll look at the puts on the market heading into Friday, Monday, and Tuesday, but it's kind of setting up for like weakness early in the week, like today, and then pinning, and then some put fuel for a rip into Friday. The other crazy thing is looking out farther in time, I'm like, we are hedged to the gills again into June 26th. Like stupid puts in the market for June. And the truth is, if we keep piling on puts as we head into the end of the month, we know that there's a. So I went onto Wikipedia. I didn't mention this, but over the weekend, the one thing that's been bugging me. Oh yeah, we're squeezing now, baby. I'm glad I'm flat. Wait a minute. The hourly trigger is higher than that. So 411.66. Hold on here. 411.66, way up here. That's what the hourly trigger is. So I keep harping on Yellen, and no one has brought it up. Why? No one has brought up why I keep mentioning Yellen. So that's a good fucking point. Someone posted, you won't own anything and you'll like it. I agree with that statement on my post this morning. So I keep harping on Yellen and no one brings it up. And I wanted to confirm it. So I went to Wikipedia over the weekend, and sure enough, I was checking, and sure enough, debt ceiling crisis is already an entry in Wikipedia. And then I went through the documentation of when that article was started, and when did it become an official debt ceiling crisis? It's fascinating because Wikipedia is like every year we don't have a debt ceiling crisis, yet this year we do, and it's been documented. This is a crisis. So if everybody is telling you we're going to crash tomorrow, Yellen's out there, we're going to crash tomorrow, all that kind of stuff, there could be some downside of that, but not like the crash that you're expecting. And probably not in that time frame that everybody is loaded to the tits and puts on. You'll get it, but it might be after or before when it's expected. And as time is ticking here, now I'm like, well, maybe we won't get the impact until after all these puts expire. There is another way for those puts to print, and that would be actual really ugly news. You need the original hedgers to go out and buy hedging, right? Excuse me. So I'm pounding this iced coffee. It's so good. So you like create a bag. Like, okay, I bought a bunch of puts for June 26th. I'm going to simplify this here. For the impending doom from the debt ceiling not being fixed. And I have to get you to believe that that's coming, right? And so I'm trying to earn premium. So I buy $1 million in puts. And I have to convince you of the same thing. So you buy $1 million in puts, and I see my puts now, they cost me 10 cents, and now they're 20 cents. And of course, I'm the first buyer, so I'm like, yeah, dude, I can definitely make 50 cents, $1 on these things. Does that make sense? And I have to keep my eye out there while I own these things for how long people are going to buy puts. Now, at some point, I'm going to exit. And those puts will start to level off in their value. And the next guy that bought was going to exit as well. Just take the money and run, right, as you head into these events. And so you need more and more people to buy. And then not only that, you need the actual event to take place. For that waterfall cascade put buying that will then print $1.50, $2, something insane. Sometimes that happens, sometimes it doesn't. So at some point, my posit here is at some point, the debt ceiling must happen. If it doesn't happen, there'll be an exit put event. And not only that, while all this put buying initially is going on, you'll have dealers that counter that trade. They're not going to chase the early part of that trade. They'll chase it if we get waterfall puts on the event actually happening. They'll amplify it and make everybody a bunch of money. But until that point, as we're going into that event, you're going to get dealer hedging flows that will counter that trade. They don't want to pay you. They're not going to just go in their pocket and take out 10 or 20 cents and be like, oh, here you go. They want some other round of put buyers to pay you and them. That's how they stay in business. That's how they make money. So I'm scared here, at least until we hear, like today we've got something after the close that can add some vol. We have some kind of event happening after the related to this, but the closer that we get, the closer you want to exit puts is my point, because it's guaranteed money taken. And there could be this like sideways trade with bag holders. We get weakness, but not what you're thinking, like 370, 380, unless the actual event happens. You'll get some vol, and you'll get some exit liquidity for anyone that's long puts, trying to gain premium off it. But with the dealers fighting you on this and needing more people to buy more and more puts as we head into it, and then that cascade waterfall, it begins to ask a lot as we head closer. So my posit here is, until we get some actual cascade put buying, I would be measured in your expectations to downside move. So you can take these moves down, but then take your money and run, wait for another opportunity to get in and out. Or if you were in early on buying puts for the premium, or buying vol or whatever it is, you exit at some point because you want to realize gains, you want to realize profits. Now you could look down the road, you could leave some runners on in case you do get that 3,000% bang or something like that, but there's no guarantee of it. And I had a friend yesterday who sent me a text message, and I don't have the details from this person, but it was in this same vein. Like, hey, I bought some puts but the good thing about this guy is he bought them in July and not in June. But I don't know when he bought them and how much he paid for them and that kind of stuff. And he bought them in like the high 390s or mid 390s. And price does matter here. If dealers offset the trade.
From the top of the hour, where we're expecting comments from ECB's Villeroy, who speaks at Bloomberg's Future of Finance conference.
We were just at 417, 414. I mean, 170 points seems reasonable if the debt ceiling is solved. If it's not solved, yeah, I see 300-400 points. But if it's not if it is solved, this guy can be fucked. He's got a lot of money on this trade. So sometimes when you go in early, it's a matter of buying the vol and earning the premium and then getting out is my point. And you can get upside down really quick.
So the UK Financial Services Minister, Griffith, says this government will not change the Bank of England inflation target.
This stream is sponsored.
Damn, those puts are still holding value. They're up at, so I bought them yesterday at 35 and 34.
Get a free trial.
And what they closed at 30, and then they're still at 51 right now. Now they're at 50, but they got some premium built in. There's a bag holder in there somewhere. He ain't selling. He's diamond hand those till they go to zero. So, we'll go, but we're gonna revisit this conversation in a moment. But we have something else to go over. Oh, this is nice. Oh yeah, look at the VIX, dude. VIX is ready to FUCK right now. VIX is ready to do some damage here. This is a 1 minute chart right here. I think I'm going to have to buy some more puts. Whew. Spicy. Game over, man. Game over. Yeah, I think I got 68 cents on a 34 and 35 buy yesterday. I'm fucking happy. It's a 100% trade. Puts really don't pay until they're kind of very much in the money. I was scared this morning that they weren't going to print. When you buy like puts at like 30 deltas and shit, what were they? Yeah, they were. I think they were. No, they weren't even a 30 delta. I bought a 20 delta put yesterday. I shouldn't have bought 20 deltas. I should have bought 30 deltas. Like, you got to buy puts like in the money. That's why I don't like puts, man. Like, puts kind of suck because you have to like pay. They're not structured. They weren't invented. They were invented as a hedge. They weren't invented to make money. We used to only have call. I don't know if you guys know this, but we used to never have puts in the market. And then when they built puts, they built them. I used to have a cool article about this that goes through the history of puts and calls and shares and stock. And it's kind of fascinating. And how they're not made to make money. And not only that, they make you pay for the privilege. When they do print, they print nice and hard and heavy. They're great. But, you know, they can buy like a 10-cent call 3 times. 5 times and only need one of those to hit. Puts, like, you have to be exact, time them right, and then you're like stuck holding them. And if you get the market goes up generally, so you can get run over real easy. So I give a lot of respect to sell side for what they do. Yeah, we're going down again, man. We're not done going down. See if we can put S2 down here. S3 down here. Just a matter of time before we start heading lower again. And I'll share with you why I believe that. Why we're not done going down. We'll show you right now. Here's the 1-minute chart on the VIX. VIX is now, price is now above the 1, 5, and hourly. This is a 3 trigger cluster right here. Right over here. As long as price in the VIX stays above 1770, right over in here, we're going to go up in here. So I'm just watching this VIX in the background.
Now we do expect to hear comments from ECB's Villeroy.
I want to let all this right here just kind of do its thing and pay attention to the VIX. If the VIX can bounce and start going higher and try to attack 1820, I'm going to take some poots. Maybe I can get a better price up in here somewhere. To the 15-minute right there's the cross. The 15-minute cross right up in here. You can see it right there. So if we can get this to come down on the 15-minute. Might get a quick little squeeze higher right here. And then a reversal. Keep your eye on that hourly trigger. It's right around 411.75. 411.75, right up in here. My cursor is right there. The conversation I wanted to have with you this morning is about, there you go, right there. If you're a bull, right in here. The conversation was two parts to this. There's a excuse me. There's a conversation I want to have to. There we go, right there, some liquidity. There's a conversation I want to have to you this morning about an article that I read yesterday. I want to gauge what your opinion on this is. I read an article or a post yesterday that said, trying to find a house in 2023, a line out the door for an open house. And there was a lot of discussion in the comments of this discussion board. You can see it right there, that yellow bar. And in this discussion, what I found fascinating was realtors and home buyers were in somewhat of a consensus. And there's one other thing to be looking at here. This is the pre-market high, right where my cursor is right here. That's what this yellow line is. There's a gap right here. And there's a giant gap right here. Scene of the crime. Let's see if I can show this. Oh, you can see this on your screen right there. Right there. There's a itty bitty gap right here, and there's a nice gap right here, unfilled.
Surely expecting comments from ECB's Villeroy.
So in this article, I was fascinated by this article because now I know retailers will I know real estate agents. I know a lot of real estate agents, and it's always, I get the whole thing that's always a good time to buy. There's another band above showing up. There are, like, real estate agents will always tell you it's a good time to buy, but what's fascinating is that real estate agents are telling buyers right now, Fed has paused rates. And we think that the rates will be down this winter. They're also telling potential buyers, you can get in now, and then this winter or next year you can refi and to the lower rate. It's home buying season. But what's most fascinating is it's not just the realtors, but buyers believe this. Now, the sellers don't believe this, but the buyers do. So you have real estate agents believing this, and that's what's being telegraphed. So it doesn't really matter what you and I think. If you ask me, hey, is the Fed done? I'm going to tell you no. Do I think the Fed is going to pause for the summer? Yes. So I do think we're pausing for the summer, but I think we are not done raising rates. Futures says we are, right? That we're going to cut rates by winter. Jerome is wishy-washy on pausing or if we're ever going to see another rate increase again. And he has stated and removed language from the actual statements of raising rates. And he's actually stated that he thinks that the tightening credit market will do the rest of the work and job, right? We saw the reports that came out yesterday about tightening credit markets. But what I found fascinating in this article was that, well, number one, sellers are like, fuck all of you. You know, I just bought in the past 5 years. I got a great rate. I'm not selling shit. But you've got the Fed still signaling a pause. And you have people drinking that Kool-Aid. People are drinking the Kool-Aid that, in fact, we are getting a pause. And in fact, we're getting rate cuts by winter. Realtors and buyers. And so they are artificially creating this spring for spring home buyer season insane demand. Housing prices are now going through the roof again. This means that inflation is going to rage this summer and rear its ugly head. And it brings up a bunch of questions. It brings up the questions of when I talk to you guys about you'll accept inflation and you'll like it. Higher for longer. It brings up the mechanics of Mary the landscaper. So even if they raise rates for longer down the road, you're still creating this entire new class of buyers. People are still spending money and taking on debt. And all of this stuff is like, they like ill-timed, the Fed ill-timed the work that they're doing. All this money came into the system, and in my view, they mistimed it. They're trying to mess with a business cycle too early. It's like artificially trying to retard a motor that's, or like you've got a car, right? And you've got, I'm going to cut the oxygen flow. It's like in a truck, like a trucker that drives a truck. They have engine retarders, right? And they'll cut off the fuel or cut off the oxygen flow. They have governors, all kinds of things, right? Try to stop an engine from going faster than it should. Try to slow an engine from revving as it's going downhill, like an internal brake. Look at that. T right off the 15-minute like it was nothing. Sell side just coming right in with a vengeance. Just teeing off up there. Wham! So it opens up like a bunch of stuff to talk about. And then Winky and I were talking this morning, and he was like, yeah, because when we were at that going in that rate meeting, I had mentioned going to that rate meeting that I was more fearful of the pause than anything. You kind of know what you're getting when we have the money printer on. You know what you got. You're like, the money printer is on, market's going up. When the Fed telegraphs to you, we're going to start raising interest rates down the road, you watch the market price that in, right? Before it even happened. Market started rolling over before we even got to rate hikes. And then they were able to front run it because, so the Fed used to not telegraph what they were going to do. Jerome Powell had a meeting where he said, or a presser where he said, we are no longer going to do that to people. We will telegraph to you what we're going to do before it happens. That's a stark change in the Fed. And he has. And they front ran those rate hikes. And you saw that the down market ended early. That got front ran too, right? The market got bought in October, got bought in the beginning of the year. So they're really ahead, right? Pricing stuff in. But now that he's paused, or now these, people think he's paused, he's kind of telegraphing that he's pausing. Winky and I were talking about this morning, and Winky brings up a great point, which is that you like the pause is kind of because in the meeting or in the rate decision he was like, this is not a pause. But the statement took out the rate hike verbiage, and then as he was speaking about it further into the day, he was wishy-washy. He was basically pausing. He's trying to talk the market down at the same time, but talking the market down is not rate hikes are on the table still. I'm sorry. You can say that all you want till you're red in the face. You can sit into it and scream it at the top of your lungs. You can sell subs. You can sell services. You can sell manager money. You can do whatever the fuck you want. That's not what he said, and I know it. I was there. You were there, too. Watch every one of these meetings. I read even read to you the actual statement. So I guess how this all wraps into housing is how does that impact when those reports come out in the summer and the fall and in the winter? We have to be out of our fucking minds to think that inflation is not going to rear its ugly head. Out of our minds. I mean, it's basically like party time out there right now. And if it's happening in the real estate market, you know, like you've got Jerome like, bad, 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 bad. And then all of a sudden, you know, like you got, like you tell a teenager, you're like, you're on punishment, go to your room. And you're on punishment for the next 6 months because you were so bad. You're like, oh, shit, I suck. This 6 months is going to blow. And you're like 3 months into that punishment. And I guess it's your father, and your dad goes, your mom is like, oh, honey, he's already served 3 of the 6 months. Why don't you just let him off punishment, see how he does? And you're like, oh, I'm such an asshole. You're like, no, I'm not letting him off. He has to serve his punishment. He was such a bad kid. But then you feel guilty. Maybe I'm talking about my own dad. My dad's like, all right, he's not on punishment anymore, but he can't go hang out with his friends for the summer. So it's like partial punishment. And what does the kid do? The kid's like, woohoo, I'm off punishment, baby. Maybe I can't do certain things, but I'm going to go party. I'm going to go have fun. And so that's my question. Like, and I was watching that. I see some of these bad reports out there, these bad ERs, and some of them are airing their dirty laundry. They're like, oh, this is all worst ever, worst ever. But they've been repriced to their pre-pandemic lows, right? And it's like, is the party back on again? And we just don't know it. That was a big part of that that Fed rate decision was, remember all the talk that, there are people that are quoted saying, if the language isn't tough enough, the market's going to explode higher. I.e., it's not just the market, like the actual economy. You know, if you're not retarding the economy, then you take that governor off, the economy might start ramping again. And there's already talk out there right now that the spring housing market, that's happening right now. So all that work that you're doing, all this work that we're doing, well, not we, but like the Fed is doing, the Treasury Department is doing, we could just come back in the fall and in the winter, and it's a shit show. You think that like the credit market is bad for people, but for businesses, it's not. Well, they'll party until it breaks. Companies will party until it breaks. People will spend until it breaks. So let me know in the chat what you think of this happening. And the fascinating part too is the rest of us know that it's not done. Someone that owns a house rate increases is like, I ain't selling shit. And I don't mean someone that's owned for like 10 or 15 years. I mean someone that's like past 5 years. They're like, I don't have to move. And I don't believe these buyers, and I don't believe these realtors telling me that rates are coming down. And they don't need to. They're the ones with the golden goose. So we're back to Mary again. And Mary is like, you know, she bought the truck and she bought the landscape and equipment, and she's doing all this work. We're still waiting on her. And we will likely wait on her, I don't know, 24, 25, 26, somewhere in there. for the credit crunch to actually make a difference to her. In this article, people were talking about paying cash. They're like, people still have tons of cash to spend. So like Mary's making money back in her landscaping business. She doesn't have to rebuy a bunch of crap. She hasn't been sued 3 times. It's like this, the part of this, we have this new like, we have this like secondary business cycle that has begun that nothing the Fed can do is going to break it. It would take like a war or something, an actual war. And right now, the proxy war is actually helping us have a soft landing. I just find it fascinating. It's like, you're like housing prices should be coming down, demand should be coming down. It doesn't seem like the credit crunch is happening. There's still no job destruction. Something really cool is when we, not cool, but when we're at an end of a business or a debt cycle, one of the things that typically happens is we go to war. And it's one of the drivers that pulls us out of a depression or a recession. These companies that build weapons and weaponry and food and clothing and this war machine that we create generates money that pulls us out of recessions. We're kind of proxy doing that right now by giving all of our old equipment and all that stuff. We have fear with China and Taiwan, so there's like this ramping going on in the background. So I don't. My point here is I don't know if I see. Like I don't know that you're gonna see that. For this new weird business cycle that's going on. I don't know if it ends, or that they can end it in the time frame that we're all saying it's going to end, or bears or collapse bears, like the market's going to crash and the doom and gloom, and we're going to start a new cycle. Remember I always harp on this. The timing isn't right. The timing isn't right. The timing isn't right. You know, if you're like a collapse person, market's going to 1,600 or something. Now it's like 20. I think it's 2,400. You know, does it like crash tomorrow and then we begin anew? Like flowers, like Apple will go bankrupt tomorrow and Amazon's going bankrupt tomorrow. AWS is going offline. I don't know. Are all the homes on your street empty right now? I see new cars everywhere. I see houses full everywhere. I see lines at McDonald's outside the road, down the road at Chick-fil-A. I see people partying. I see people going on vacation. Can't get a ticket to anything. Where is it? I'm wondering, where is it? Where is that destruction that we're all talking about? And coming into this spring and seeing this demand still on housing, it makes me say, yeah, we're not there, dude. They haven't destroyed anything. They haven't destroyed shit. And that's kind of what you're looking for. Like, I was talking to Winky this weekend, and we were talking about how you can see things before they happen. A good one was Chegg, right? Chegg and AI, right? We all were like, oh, yeah, open AI and ChatGPT is going to.
EU banks face tougher supervision than many US peers.
Going to be able to become a new tutor for kids. I mean, writing papers for kids and all that, but nobody was short Chegg, which they should have been. You know, you see like a kid using a device that nobody else is using in a publicly listed company. And all of a sudden you find out that that company is going to go to the moon because every kid's using it. That kind of stuff.
By signing up at tothetick.com.
So when I'm looking around right now and I'm looking for the demand destruction, I don't fucking see it. I ain't seeing it. I'm not seeing divorces everywhere. for those reasons. Like, I'm not seeing my buddies getting divorced because the husband or the wife is out of work, or because they lost their house and the dog's dead and whatever. The record's playing frontwards. The old country record is playing forward. So I'm not seeing it. I'm not seeing. I'm seeing people struggle. Like, I can't pay my bills, or cost of this is too high, or I have to work 2 jobs. I can see all that. But that's still not indicative of like it was in 2008, 2000. I remember those times. Maybe the closest thing that I could see to today would be 87. Everything was great one day, and then we had the crash, and that was it. Like 07, 2000, you saw it coming. It was like a slow moving freight train. Like, you started to see the cracks.
So taking a look at the Fear and Greed Index, 61 out of 100, signaling greed, and the Crypto Fear and Greed Index, 51 out of 100, signaling neutral.
Yeah, we're still greedy here. I mean, you got Jefferson this morning saying inflation has come down. Fed's Jefferson saying inflation has started to come down. Inflation will come down while the economy continues to grow. Inflation has started to come down. The economy has started to slow down in an orderly fashion. I'm going to post the link to this this discussion inside of the chat for you. If you want to read it on your own time. It's like contra everything. There you go. No, I remember when it was happening. I was old enough. So I want you to know, I'm from a very wealthy place. Like, I was living in Vail with the Enron boys. Skiing with the Enroy boy, and I was skiing with the Hyatt boys. I actually hung out with those guys every weekend. The Hyatt Sons. Party with those kids. So, like, you saw it before it happened. It was like you could see it coming. I'm just not seeing it right now. You're not seeing abandoned housing everywhere. Like whole neighborhoods. Right on, Fibonacci. I like that name, by the way, Fibonacci. It's really weird. There's this I don't hear anybody speak about this. There's like a secondary business cycle that was created by the money flows in COVID. We were told, like, when I was on FinTwit and on Wall Street Bets and all this, like, there was like this, it's kind of like the Jim Cramer shit. It is the great Jim Cramer shit. You're told things like, because we like to make jokes about it, and it becomes the zeitgeist. Like in COVID, all you heard was, everybody got free money. And they pissed it away on gambling in the stock market, and they pissed it away on, I don't know, fucking new cars and trucks and blah, 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 like, I don't know, vacations or whatever. I think that's true. But I think a shit ton of people, like, paid off their mortgage, put that money to a new house, renovated their house, paid for their college tuition, removed debt from their lives. Like that, some people, I think there's like a decent size, like maybe 40 to 60% of people actually put that money to work for themselves. They looked at it as like, hey, this is the first time in my life that I'm have a chance to take care of some stuff, and they did. So I think there's like this secondary business cycle underneath the surface that needs time to play out. Like there's like, you need Mary, the landscaper, who never would have had a landscaping company without debt. You need her equipment to get old and break down and, you know, go through that cycle that she's going to go through. Even while the Fed is removing money from the system. It's going to take time. It's not, and like the Fed's like, well, we're going to do it right now. And I'm like, yeah, well, that's been a fucking year, man. 2 years. Like you need like that it's going to take time. And then you have the Fed at the same time supporting while they're doing this destruction. So that's like another fly in the ointment. It's another like, oh, fuck. They supported the regional banks. And then, they said they're going to support commercial real estate and anything else that comes down the pike. They probably know. The Fed probably knows, hey, look, it's going to take. The Fed's not going to tell you this, but they're like, the Fed's, I bet you behind a closed door, there's a guy in the Fed, a scientist going, there's some lady named Mary, and it's going to take her 5 years for us to catch her in our web of destruction. So, like, keep going on with your destruction shit, but it could be 5 or 7 years. You know, and the truth is we've never done this before, right? We've never had really, truly any situation like this where we shut the entire country down, then we inject cash into it, quite like COVID. So it's not like I can blame these people or us or guys or anything. Like, and you know they're consuming some of this stuff too, but you're just realizing that our economy is more resilient due to that injection of cash than we anticipated. Maybe we were all drinking the Kool-Aid on that everybody just pissed that money away, and they actually didn't. That's my posit. They didn't. So if we're not going to raise rates to 20, if we're not going to do that and create real destruction, if we're going to pause, we're not going to get above the rate of inflation, then it's going to take some time. It's going to take time. It's going to take 2-3 years. If they're supporting, it's going to take 2-3 years. Yeah, that's true. If Mary drives a Toyota, it'll be fucking 10. It could be 20 with a Toyota, right? I owned a Toyota, brand new one. I could have driven that thing off a cliff and let it roll down the side of it, and it still would have been drivable. Best truck I've ever owned in my entire life. Best vehicle. I think overall, best vehicle I've ever owned in my entire life. So the last thing that I want to say to you today is I have some business stuff that I have to, well, I'm supposed to go golfing later today, but I have some business stuff I have to do today. So I'm going to be in the office with you. I'll be here. I'll leave the camera up. If there's a major market move here, I'll take a call or a put or something with you. My feeling is that we pin. This actually looks like it's going up, believe it or not, but I don't see a lot of market movement. I think the awaiting the Fed data bullshit is going to pin us. So I'm going to be here with you today. In the background, if there's like a major move or something, I'll jump back on. But I have some people I have to call. I have some emails I have to send out, and then I have to also, I think that kind of stuff I have to do. I have to get that done today. So stick around in the chat. If you guys want, I can put CNBC on, I think, in real time, like the audio. I can't put video on, but the audio I can because it has ads on it and stuff. It'll be fine. Or I can just leave the news squawk up, and you guys can just stay in the chat together, whatever it is you're going to do. Yeah, we have a there's more than just CPI. Today at 4 p.m. Not listed here, but we have something with the debt ceiling at 4 p.m. today. You guys know about that? We have something about the debt ceiling at 4 p.m. So that's a big one. Then tomorrow we've got CPI, all of it, right? Core, year over year. But Thursday, another big one is PPI. PPI has been important recently. So we have PPI tomorrow. We have claims tomorrow as well. So we have Wednesday vol, Thursday vol. So no, we have Tuesday at 4 p.m. vol, Wednesday vol in the morning, Thursday vol in the morning. Consumer sentiment, import price index, import index minus fuel. Those are on Friday. Next Tuesday, we got retail sales. We got the Philly Fed, I think, next week too, don't we? Yeah. And we're hedged out our asses. Like, we are hedged to the tits right now. The market is like everybody, or I don't think it's everybody, I think it's retailers or people that are along the stock market with underlying or just have a ton of puts out there. We can look at that at some point today if you want. Like, what I gave the dates yesterday, but we are hedged out our asses until like June 26th. Yeah, for 90%. I mean, my wife's got a Tesla. She loves it. I like it, but the Toyota, like my Toyota truck was fucking awesome. Thing went anywhere. Never had a single. It was dated. It was brand new and it was dated. I don't think that. Matter of fact, I think they might have just recently changed the design. But it was the same design that it was like 2 years ago. It was the same design as it was when I bought mine. And I never had a single problem. Nothing broke. Never needed any kind of service. Changed oil, changed the plugs. And fucking awesome truck. Went anywhere, did anything. Yeah. Had the 8-foot bed and the extended cab. It had everything. Like, it was awesome. It was a Tundra. It was a tank, dude. It was weird too. When I went to go buy it, I was like on a road with multiple dealerships. I drove a Ford and a Chevy, and they had all the bells and whistles. And then I went and drove the Toyota, and I was like, fuck no, this is the truck for me.
The UK DMO says the new 2063 conventional gilt to pay a 4% coupon.
Like the Toyota and the Ford and the Chevy had all the bells and whistles and like the luxury and all that, but when I sat in the Toyota and drove it, it was like, you want to go fuck around? I was like, yeah, I do, totally. And so I like went on the drive with the Toyota, and it was like, bro, I'll never let you down, bro.
DMO says the new gilt will launch via syndication in the week starting May 15th, subject to demand.
I'm serious. That's what it felt like. When I was driving the Chevy and the Ford, it felt like it was like a not broken down, but it was like, oh man, I don't know how far I'm going to make it, bro. And I only get like 18 miles to the gallon. Like you just knew it was just waiting to start breaking shit. That's true. And they drive different too. You could just tell, like,
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments.
Yeah, you ran a private Total Lexus performance shop for 18 years. No, I sold my Toyota when I left the West. So I needed it because I was living in the West, in the mountains and stuff. I'd take it everywhere. Like Canyon man. I came out here and I was like, back in the city again, I'll do what city folk do. And we ski and stuff still, and we drive a lot more than we did out west. We drove a lot out west, but we wanted some comfort for the family, so we got a ski wagon. We got a Cadillac Escalade. It does everything. I put a ski box on top and throw the dogs in there, and they're in comfort and safety, all that kind of stuff. If I ever move back out west, I'll probably buy another Toyota or probably another Toyota. I was never a Subaru guy. I never liked how low you were on the boxiness and then the clearance and all that kind of stuff. I do a lot of backcountry stuff out west, so Toyota's kind of my jam. Yeah, they won't let you down, dude. They'll run forever and ever 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 and ever. I wish I still owned it, to be honest with you. Probably the best vehicle I ever owned. Like all around, like it had knobs and buttons. Well, it had like buttons for the windows and stuff. But people complain right now about all the touchscreen stuff. Like, I think the only touchscreen I had in that thing was the like infotainment center and stuff. But everything was like built to last. Yeah, the other thing that I had a problem with the Subaru is all my friends would have issues with them. They had what is it, not the time, I think they have a timing belt. And everyone had what's the other problems they had was the I think it was a gasket cover problem. Maybe a transfer case, I'm not sure, but there's like known problems in Subarus. Like you drive a Subaru for long enough and it's fucked. It's going to cost you some money. Yeah, I like Tesla. It's just not the well, one thing for Detroit is got crazy potholes there where the roads suck. Well, Michigan in general, that the roads suck. It's a feature for Michigan because they get so much money from the well, I don't think it's Ways and Means, but transportation. They get so many transpo dollars, keeps everybody employed in the state. But the roads suck here, so I need like something that can, like a Jaguar type ride. If you guys know what a Jaguar type ride is like. It's like Cadillac filled that niche. But Tesla, it's great out in like the big highways out west. Like the off-road stuff is the other part of it, the equation for me at least. I don't know if I had. I'm trying to think of all. It had all the bells and whistles for Toyota, but it still wasn't like when I was driving driving the top of the line Toyota, top of the line Chevy, top of the line Ford. Top of the line Chevy and Ford, man, they had every bell and whistle you could think of.
At $71.84 a barrel.
But like the bed so I was like looking at the Toyota, I'm like, this bed's never gonna rot out. I was like, this bed's, and they like put the liners on it and all that stuff, and I'm just like, never gonna have a problem with this truck ever. And if I ever have to fix it, that was the other thing. When you open up a Toyota, you look inside, you're like, I can fix that, definitely. Like if you try to change the oil, has anybody here ever tried to change an oil in a Ford F-250 or F-350 or an F-150, any of those trucks? Fucking nightmare. That's like some of the secrets of those trucks. Like try to do your own service on a Ford or a Chevy. Good luck. Yeah, when Scoobies go past, all you hear is bearings and lifters. Yeah, I do. You do hear the lifters and the bearings. Yeah, I agree with that statement 100%. And you can just tell. I mean, and it's crazy too. Is like my Tundra was like a bat out of hell. Bat out of hell. Like, and I had 4-wheel drive, all that shit on it, but it was like a bat out of fucking hell. Like, you drive one of those, like an outfitted or kitted out Chevy or a kitted out Ford, and it's like an overweighted. It's like you're just dripping in gold. Like, it ain't moving like a Toyota Tundra. Like, Toyota's like whippy and fast, and it's got some torque. I changed my oil in my 97. Have you ever, any guys ever owned an F-150? I've owned an F-150 too. When I got, so I have I don't have it anymore. I should have kept her. I called her name was Betsy. When I first moved here, I bought an F-150 to rehab houses with. So it was like an around the town kind of truck with a top on the back and stuff. It was just like a round town work truck. But to do any maintenance on it, it sucked. It was horrible. It was but it filled the function that I needed it for. Like a work truck, it worked great. Okay, so market's kind of just chilling here, right? Not doing too much. If I see anything that's important, I mean, this here, I mean, you know what this looks like, right? Ping pong, ping pong, ping pong, ping pong, ping pong, right? What you're looking for here, if you're looking for a move up to close the gaps up here, so if you're looking to close this stuff up here, you know the drill, right? If price gets above, so this is a 1-minute chart. Let me mute this real quick here. So if you want to take a long here or a short, I'm going to show both to you. Want to take a long and a short here? You know there's gaps above here. All in here, there's gaps that need filled. There's probably a promise of a gap for you too up here. Like, hey, come on up here. We can close this gap. Until we start to close those gaps, you can see that there's a defined trading range. So we play ping pong until we get a decisive move up or down. How you can see that is if price gets above the 27 EMA on the 1 minute for a short play, like a 2-minute play, 5-minute play for ticks, or better yet, on a 5-minute chart, you already know if price is above the white line, right? Like it is right now. See this white line right here? You can pretty much guarantee we're going up to this red line. You take the money before we get there. You already know where the hourly is. The resistance point is right here. So there's a small trade in there. There is a small trade in there. But then the trade doesn't become a bull trade like to higher highs until a few things happen. So you want to see there's like 2 or 3 trades here if they prove themselves. There's the first trade up to here. Take the money and run. There's a second trade that'll retest the 5-minute. If this holds, there's a third trade up here to close the gaps. So 1 trade, 2 trades, and 3 trades. If this trade fails here, though, you don't want to be trapped in it, right? So you take the money and run. You let the algorithms do the work here. There's a second trade. Take the money and run in case you get sent back down to the depths of hell. And then you're waiting for a successful defense, and this is the big money trade right here. You've already canceled out this. You've already canceled out this. And So this is where the big money is to cancel out, or a failure to cancel out that over there, okay? I wish I could permanently draw on this. Maybe should I just leave it up so you guys can see how it shows itself? Should I just redraw that whole thing for you? Just leave it up? I wish there was like a program that would do this for me. Well, we kind of have this program. Winky's working on this right now. Hold on. So you can kind of see the future before it happens. Should I just leave that up on the screen? If it, watch my cursor. If this fails right here, or if this fails right here, you know we're going down. So if this white line fails at any point, you're short. Does that make sense? I didn't even see this one here. We already broke through this once. We might go straight up here now. This is actually possible. Because this one, we already broke through this once before. So we might actually break right through and go straight up here. Q snow danger. Can I delete this now, or do you guys get it or no? You want to take a snapshot of that, maybe? You should be able to pre-visualize this in your head. Can you guys all do it? I want to know at home, can you already pre-visualize this happening? Nobody's saying anything in the chat. Thanks, Spyplex, for saying something, brother. Thanks, Spyplex. Thanks, Douglas. Thanks, Sunday Never Ends. Okay, you know what? I have to write that down, Darth Molly. I have to write that down, brother.
So S&P Global Market Intelligence cuts the US real GDP growth forecast for 2023 to 1.2% from 1.4%.
I will write that down. That's a good point.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
We can probably build that, dude. What were they asking Winky? What were they asking Winky? What were they asking Winky in chat? Someone asked me yesterday, they were like, somebody in the chat yesterday said, Winky, if you're here, listen to this. Somebody in the chat, I think it was on YouTube chat, somebody said, I already pay for all that shit.
Intelligence cuts the US real GDP growth forecast for 2024 to 0.9% from 1.5%.
Somebody goes, I already pay for all that stuff. Why should I buy it from you? I wanted to respond, well, then why the fuck are you in this stream right now? If all that shit works for you. I was like, then what are you here for? I was like, if you're paying for all this stuff that you say works, then what are you doing in my stream? I was like, if your Furu out there is doing it for you, then what are you sitting here? You should be on his stream right now. I love you too, goat boy. I love you too, brother. Internet hug, bro. I got you, MK. So we talked about this earlier, right? Just a few minutes ago. Drew this one out for you right here, right? Bulls need to hold this line right here. Price can't get below it. If price breaks this line, right, then this line turns different, right? So right here, if the bears can get over, then this line rolls over, doesn't it? I'm also going to put up the 6 EMA for you. We don't need this, but I like to see it here. The reason why I like the yellow line, the reason why I like it here is because, let me see if I can make that line thinner. Like the thickness of it. The thickness. Make it a thinner line. Maybe only that thick. The white one, size matters, baby. Yeah, it's good right there. Oh, yeah. Oh. That's bullshit. Size probably doesn't matter. But you do like, so this is a 5-minute chart. So this is a 5-minute chart. So you have the white and the red right here all tied up with each other, or the white and the yellow. See this white and red? This yellow is actually representing on the 5-minute chart. It's representing a 1-minute trader right here on a 5-minute chart. I don't know if I explained that right or not, but so just right now, imagine in your mind. I want you to imagine in your mind, or just chart it out at home. If you're at home right here, remember the white and the red line. Those are the only two you need to know. Remember what I said to you earlier. I said, you're going to see the reversal. Damn it. Fuck. You're going to see this grind. This grind's going to resolve to either the downside or the upside, and then the recheck, and we go higher. This is kind of like no man's land in here as this happens. If you're bearish here, you still want to see, like if you think this resolves to the downside, maybe you're a bear and you're watching right now, and you think this is resolving to the downside. The bull trap on this, we'll do red bars. So you have your reversal right there so far. But you want red bars underneath. It'll probably be like a liquidation break. Then it'll come back up and reject one more time, and then you actually get your move down to the downside. So this is where if you're going to set up puts right here or a short, you're going to do the short down here. You don't do the short in here. You could do the short in here, but you got to do your stops above some. Like you have to say, I'm going to put my stops up here. But you can get cut up in here. So usually the best place is to take the short down here. And if you're a bull, the best place is to take the long above. Like even my thesis in here is still for a bull to wait until we're up here. And you have a confirmation right there. And this is the confirmation for the bears right there with red bars going down. There's the confirmation of the upside. There's the confirmation of the downside. Otherwise, it's just bullshit in here. It's a bunch of scam dude in here. VIX and XLF and XLY, XLK can tell you some stuff. HYG, Dixie.
Rating says market turmoil boosts the flow volatility of bank deposits and money fund assets.
Shut out on MBLY. High volume on June option chain. Prices up 6.3%. Thanks, I appreciate that, Jimenez. Kenny Tran's in the house today. Okay, yeah, just give me I have a few business things I got to take care of today, so I'll be here. I'm gonna put up I'm gonna leave the camera on. I just have some phone calls to make. And I got some emails to send out, and I gotta get this shit done. I have a choice. If you guys need my attention or something like that, shoot me a text if you know my phone number, or just start blowing up the. I'll keep checking the chat as the day's going on.
So the US to sell $35 billion of 4-week bills on May 11th to settle on May 16th.
Hey, Captain Jim James here. Should I just move, or should I just, maybe I'll just take the camera off for you guys. I am in a meeting right now. I wanted to stay with you guys on the stream. I want you guys to know that I'm here. So if there's a major market move, I wanted to leave my video up so that you know that if there's a major market move, I'm here with you. But if it's just easier, I will just turn the camera off right now. And because I see a lot of people continuing to ask if I'm on stream right now, that you can't hear me. Okay, you guys don't understand. I'm going on break. I'll be back. One minute chart has a reversal candle here in the 1 and the 5 minute. We have a bear cross taking place right now, here and here. Looking for a rejection to the downside. I'm going to switch over here to a 5-minute. Still, now it's resolving to the upside. This is back to a 5-minute chart right here. I'm going to take a look at the VIX really quick in the background. I've got a bunch of bullplane signals coming up right now on the SPY, by the way. I'm getting a bunch of alerts right here saying we're going higher. VIX is beginning to reject to the downside as well. Probably going to place a call on some calls right now. I'm long calls here on the SPY for a squeeze higher. Also note that there are algorithms buying about 200,000 calls on 412C. Hang tight, Biggie. I gotta check in. All right, so I'm sitting in calls right now, and I'm getting fucking ground to dust. And I'm watching, I just swore. So I just said I wasn't going to swear anymore, and I'm swearing. So I'm sitting here in calls right now. You know, like VIX is looking bullish. And all this like drama right here, I can't tell if it's just trying to squeeze me out, like they're going to bloodbath this, then bounce higher. You know, some kind of nonsense like that. Like I'm just looking for a catalyst for us to bloodbath, and why. But then I'm looking at like Google and Apple. Like Apple looks bullish. Like Apple looks like it wants to rip some faces off right now. So this all looks like drama to me. So I don't know. Maybe if we bloodbath down here, I'll just buy more or something. It's just fucking nonsense right now. Like this is just like yesterday. I'll be sitting here in a trade, and there, you know, like it's one big bullshit fake out. So I don't know what to say to you out there. I don't know what you're in right now. I'm sure that Theta Gang is Theta Gang. Whoever's in butterflies and condors right now is like, woohoo, making all this money in time, baby. Meanwhile, you know, like nothing. It wouldn't shock me to see like bloodbath and then rip some faces off and close these gaps above. To be honest with you, or they're just trying to shake me out of my calls. I don't know, but yesterday I made some mistakes. I had if I just left both sides on yesterday, I would have been filthy fucking rich. Shouldn't be swearing, but I would have made stupid money. I mean, hold both sides until they print like 200-300%. Both sides printed like that yesterday, so I don't know what to do. I probably should just be flat. Like when we're not in a trend day up or down, it's kind of like, you know, like I'm just wasting my time here. You know, like normally, like on a day like today, you'd get like continuation to the downside, right? Or you start making legs up higher, you know? Like making legs lower. Like trend days are kick-ass, right? Just jump on the train, you're off and running. Like yesterday, today, the way this market is hedged right now, dude, we could literally, I didn't want to say this morning. There's a possibility that we could trade sideways like mid-June if we don't get any volatility. Like you just have enough fear in the market where like no one thinks we're going up. Everyone's hedged to go down, and there's no news. So, you know, it just grinds everything to dust. It would be horrible. That was like my biggest fear this morning. And yesterday I was looking at all the market and I was like, man, the way this market is hedged, we just grind. Should just be grind. Like we could torch this whole option market for like a month and a half. That would break my heart. Like 6 straight weeks of sideways. We've done that, right? Like October, I think, in December, we had a bunch of that shit happen. Just like weeks and weeks and weeks of sideways. So anyways, I'm going to go back. I'm still in a meeting right now. I just wanted to check in with you guys. I don't know what to say to you. Like, on one turn, VIX looks like it wants to explode higher. Another turn, VIX looks like it wants to sell to the depths of hell. I'm looking at Apple, and it's telling a completely different story. It's like, yeah, we're going up, bro. I'll look at HYG. Maybe I'm missing something. Dixie or something. Like, maybe I got to be missing something. Something in the market's not telling me. I mean, like, HYG has a giant gap to fill above, but it looks weak. Dixie. Looks strong. Dixie looks strong. But Apple looks strong. Google is Google's like going right down on its hourly trigger. Google's ready to explode higher. So I don't know what I'm missing here. Maybe you guys know something that I don't know to pick a direction here, but I don't know what to say. Like the market is giving mixed signals right now. XLF. Hold on here. I mean, I can't call it. XLF has a gap to fill on the upside. That's a driver for an upside movement. KRE, I'll look at that one right now. Double bottom right now in KRE with a gap above to fill. So I'm not really getting like a market signal right here saying we are going this way, we're going that way, in either direction. And even if we do go a certain way, right, it seems like, like if it bloodbaths, it seems like it's going to rip face again. If it rips face to the upside, it looks like it's going to trail back off again. So I don't see a direction. Let me read the chat real quick and see. Maybe you guys have something that I don't have, but it looks like premium, like just like premium sellers out there. Oh, Chase is here. How you doing, Chase, brother? Yeah, Chase, we were talking about that shit this morning, man. We were talking about like how hedged the market is, and then how you need a catalyst, and you need like waterfall puts to pay the puts that are being put on the market right now. Like if you're trying to capture the premium, that you have to get out in case it doesn't happen. Dude, tell them all about this, Chase, because I don't think everybody understands. I was explaining it earlier in chat Chase, and not in chat, but earlier in the stream, and I don't think everyone. So I think some people understand it, but there's like 30% of people don't understand how the options market plays into this. Thanks, Chase. I appreciate it, brother. Thanks, Jimmy. Oh, we got John Williams at 12. Thanks, Mike, for saying that. Yeah, so supposedly we got some vol coming at 12 o'clock. All right. Yeah, thanks for dropping some data inside the chats, guys. YouTube people are dropping all kinds of data right now in the YouTube chat. I mean, this shit's crazy. Like, I feel terrible. Like, we should be out golfing right now. Like, what? Dude, there's no point even being here. I can't chart anything right now. I'm in a conference call right now. But I will at some point for you. I'll do Snap for you later today, but I'm in the middle of a conference call. I've asked him to give me a few moments to get on stream. But I wrote it down. I will come back and do Snap for you. Here, let me look at Snap in the background. Let me see what I can see on Snap. 1 minute chart on Snap. Bearish. Price needs to. You need a cross, man. You already know to do it. You already know what I have to say about it. What you need to know on Snap is the hourly trigger is at $8.28. So just knowing that, snap a green bar in your own chart at $8.28. Use the 27 and 113 EMA on a 1 or 5 minute chart. When price gets above on a bull plane, your first target is that green box, and then you want to see the consolidation above the hourly trigger. You want to see the white and red line get above that green bar and price stay above it for an explosive move higher. Hope that helps, man. On a 30-minute on Snap, like, what's my overall take on Snap? It's at the bottom, man. It's ready. It's ready to start ripping. I'll give you some upside targets if it gets above that hourly. $9.59. $10.62. Valhalla, $23.68. If you missed any of those numbers, just pause the program, go back to a minute or two, and you can read them for me again, or listen to it again. That's a good setup, by the way, on Snap. I like it. I like the setup on Snap, generally speaking. It's becoming bullish. It's becoming bullish. It's a good call out. And I do appreciate you calling it out, my man. All right, I'll be right back.
And Hammock says that real risk to the US dollar from the potential protracted debt ceiling negotiations.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So 5 minutes away now to get the EIA stereo report, and as well in 10 minutes time now we do expect comments from Feds Williams. So Feds Williams speaks at the Economic Club of New York. Text is expected, as well as a Q&A with the moderator. So shortly expecting the EIA steer report in just over about 5 minutes away now. We do expect comments from Feds Williams, who speaks at the Economic Club of New York.
There's a 15-minute bear cross on SPY right now.
And so just keep in mind, still no sign of the EIA's short-term energy outlook report. We're just keeping our eyes out for this. And again, just under 5 minutes time now, again, 5 minutes past the top, we do get a text release from Feds Williams as he speaks at the Economic Club of New York. This is in the EIA steer reports here now. So the US EIA cuts forecast for this year's world oil demand growth by 120,000 barrels per day. Now sees 1.56 million barrels per day year-over-year increase, and cuts next year's world oil demand growth by 130,000 barrels per day. Now seeing 1.72 million barrels per day year-over-year increase. So we have provided the EIA steer report on the feed for anybody interested.
I'm also long puts. I'm on the opposite side of the trade right now. I've got some calls dying here, and I also own puts.
So 1 minute remaining to expect the text release from Feds Williams.
Is my stream freezing for any of you out there? Getting says on my end that my connection is excellent on YouTube, but someone's saying that my stream is frozen. Is my stream frozen for anybody out there right now? Oh, my PayPal account is frozen? That's possible. Let me check.
So seeing comments from Feds Williams now as he is confident the US central bank is on the right path to lower inflation to 2%. Says he will monitor data.
My PayPal, they PayPal
policy, that it will take time for the Fed rate hikes to bring the economy back into balance. Feds Williams says he is focused on the
check right now.
impact of tighter credit conditions on economic outlook and expects inflation to ebb to 3.25% this year and 2% in 2025. So does expect the economy to grow modestly this year. This as inflation pressures remain at too high. Projects the unemployment rate to rise to 4.5% this year.
No, Willie's saying, oh yeah, Willie.
Amid signs of slowing demand for workers. Williams adding,
yeah, they froze me one time in the past. They thought I was a fraud or something. It was it was twofold. They thought I was a fraud and they wanted me to go through Twitter or YouTube directly, and it was because they wanted a cut. Like they set it up so they're like, oh no, you need to give fucking YouTube money and Streamlabs money and Twitter money and
signing up at tothetick.com.
It was a disaster. I'll be right back. This is the same setup as yesterday. Now I'm sitting on calls and fucking puts. And now I'm sitting in calls and puts now. And to be honest, I don't give a fuck. Sorry for swearing. I don't give a fuck which side prints. Because I almost know, I mean, I'm almost sure that both sides of these calls and puts are going to print one way or another. Or at least it worked out very well yesterday.
So the Biden revokes federal workers' COVID-19 vaccine requirement. So elsewhere, seeing strategic U.S. oil reserves are to begin to refill after storage repairs. So looking into this, the Biden administration plans to begin purchasing oil to replenish the nation's emergency reserves after completing maintenance work later this year. So the SPR currently at a 4-decade low after the federal government withdrew a historic 180 million barrels to tame gasoline prices in the wake of Russia's invasion of Ukraine. Biden administration previously said it planned to restock the cache when prices reached about $70 a barrel, but wasn't specific on timing. So seeing from an NBC reporter via Twitter, as US House Speaker McCarthy tells the reporter that he will reject any White House efforts at a short-term debt limit lift to align the calendar with the budget negotiations, quoting, "Let's just get this done now." So just looking deeper now into the EIA's short-term energy outlook report. So the EIA does see this year's US natural gas consumption at 87.54 billion cubic feet a day, up from the prior forecast of 87.37 billion cubic feet a day in April. So again, just to recap from an NBC reporter who did tweet that US House Republican Speaker McCarthy did tell the source that he will reject any White House efforts.
So here's the 15-minute chart right here.
Calendar with budget.
Now, under normal circumstances, I'd be like, yeah, dude, this is awesome right here. Like, you see that right there? And you see this right here?
He opposes extending the debt.
Right down there.
September 30th.
There's the daily trigger. You guys paying attention out there in YouTube and Twitch land? Maybe we can get a little blood down here. Be kind of nice, right? Start bleeding down here. Bloodbath this thing down into the daily trigger. It is 12:15. This seemed to have started about 11:45, 11:30. We talked about 11:30 and 1:30 in the afternoon today. If you want a prior example of this happening and what took place, I'll give it to you right now. You can see it right back here. Here's a previous cross right where my cursor is. 15-minute crossed over. This is back on the 2nd, May 2nd, and it was a steep bloodbath in the market. It doesn't, mean it's going to happen, but just right here, just keep your eyes peeled on this. I don't know that I'd expect it to be as fruitful as that day, the last day that we had that nice, beautiful selling action, but we'll watch it, man. I got some dead calls here just in case. It's like a hedge to the upside. But otherwise, I threw some puts on in case we get that straight bloodbath down into this close here. The 15-minute is saying we're going down. So we'll see how this plays out. It's like watching paint dry, I'll be honest with you guys. So there you go, 15-minute chart. Nothing like I've got mixed signals all across the market right now. It's not like definitively like everything's selling off. Matter of fact, I haven't looked at the heat map yet today. Let me look at the heat map real quick. Usually there's like a bunch of stuff that'll be like, hey, we're going up here. Hey, we're going down here. And for me personally, I wouldn't be trading this normally. So I'd be I'll be honest with you, I'd be fucking fishing or fucking golfing or hiking or something. Market's like, it's down, but there's green in this market right now. There's the green and red. Looks like rotation. Looks like another fucking rotation. Doesn't look like blood red blood. Bright red blood makes green grass grow kind of stuff. So we'll see. We'll see if the Bears can do it. You need to like get on FinTwit and get on CNBC and like bring some fear into the market or something.
Data dependent with monetary policy.
This stream is sponsored by TickStrike. TickStrike allows you to actually...
We need to bring Yellen on, but she's been on so many fucking times
get a free trial at TickStrike
that she doesn't count anymore. Like if you listen to Yellen scream all day long, you're not going to get any volatility when she's out there barking all day long, man. You need her like to only come out every once in a while.
Williams says the Fed will raise rates again if needed. Williams doesn't see any reason to cut rates this year. And Williams says not seeing a wage price spiral today.
this is, you guys want some asinine stuff? You got Fed Williams is like, I don't see any reason to cut rates this year. He didn't say we're going to continue to raise rates this year. So he's basically, now what's fucked up is that this quote from him is like bearish, but it's not bearish. Bearish would be we're raising rates in June, so, and cut rates is bearish too. So like he's kind of backing up the idea that we're going to fucking pause. Dude, I don't know what to do with the news that's out right now. Like reading these quotes from Williams, I want to like inject bleach in my eyes or something. Like the shit smearing from these little Fed presidents. It's like Disasterville. And here's the rest of what he said. This is where it gets all crazy. Like this is like painting shit on the wall. He said, ready? He said, the Fed has not said that it's done raising rates, right? Then he says, the Fed has made incredible progress on monetary policy. That's not really big, but here's the key ones. The Fed has not said that it's done raising rates. The Fed needs to be data dependent with monetary policy, i.e. pause. And then the Fed will raise rates again if needed. And then I don't see any reason to cut rates this year. So basically pause. I mean, he basically just told you we're not going to raise rates if the data comes in that things are better. And we will raise rates if data comes in that it's bad. Well, we already know, looking at the real estate market coming into springtime, that the data is going to look like dog shit once we get into fall. So we're going to have to raise rates, we know, at some point. But we don't know right now.
Fed Williams says that structural shifts will not impair the Fed's work to hit the...
And I got to tell you, the reason why they do this, you'll sometimes hear the Fed will be very, clear on their path. It's because they know where we're going. When they have no fucking idea what they're doing, they smear shit on the wall because they don't ever want you to come back and say, why didn't you know what was happening? And so what they'll do is pick and choose comments and say, oh no, if you look back on this date, you can quote me on this that I said. So you'll see them when they're clear on their path, they'll be uniform in what their statements are. But when they don't know what the fuck is going on, they will be quoted multiple quotes so that they never look bad. Oh, sorry, I'm just ranting here. I gotta go.
Feds Williams says, I do not have a recession in my baseline forecast. And Fez Williams says it is possible the US economy has more underlying strength.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Fez Williams says I'm seeing signs of further tightening of credit. Fez Williams expects credit to be tighter and more expensive. Fez Williams adds that tighter credit may blunt how far the Fed goes with rate hikes. Fez Williams, however, doesn't see tighter credit knocking the economy totally off course. Fitzwilliams says wage growth has slowed and now stabilized at high levels. Fitzwilliams just repeats a sentiment saying that banking system is sound and resilient and is quite strong. And Fitzwilliams says the acute phase of the banking sector stress is likely over. and Fed bids for 3-year notes totaling $10.9 billion.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So in 10 minutes time now at the top of the hour, we are expecting comments from ECB's Schnabel as well as the US 3-year note auction sale. So ECB's Schnabel due to be giving a lecture at Hessische Kreis and also the US 3-year note auction. So again, the US is selling $40 billion in 3-year notes at the top of the hour. The prior bid to cover was 2 to 59 with the prior high yield of 3.81%. So looking at a note from JP Morgan strategists ahead of this 3-year note sale, the strategists see the auction as being digested smoothly given the move higher in yields over the last couple of sessions, along with ongoing concerns with debt ceiling and regional banks. It's also looking to the latest CFTC positioning data, which shows that speculators were net short 910,000 5-year note futures, which is the most on record and a possible source of covering demand. So looking to dealer inventories as well in the 2 to 3 year sector, which were net long $10.7 billion in the week ending April 26th versus the $1.6 billion average over the average long, that is, over the past 12 months. So considerably bigger position net long from dealer inventories. So we are now 5 minutes away to the top of the hour. The US due to be selling $40 billion in 3-year notes. Prior bid to cover was 2 to 59, and the prior high yield was 3.81%. Keep in mind, we're also expecting comments from ECB's Schnabel due to be giving a lecture.
Okay, checking back in with you guys. Got a quick moment here before I got to do something else. So not much going on today in this market, right? Just zigzagging up and down. Come down here, monetize some puts, come back up here, back down here, back up here, back down here. This is the sellers on the 15-minute time frame. This is where that cross is. Here and somewhere right in here. This is like a 15-minute bearish cross. So we'll negate this if price goes higher on the 15-minute. And this is a 5-minute chart right now, so we're back to this same bullshit that we had earlier, right? So we'll see how this works itself out. Not seeing much today. Market's not doing a whole hell of a lot out there. So I'm kind of grateful that I was able to get some of this stuff done. I'm still sitting in some puts and calls for today. I'm sitting in 0 dates for both sides. So I don't really care which way we resolve to. It's now 1 o'clock in the afternoon. No movement today. The entire move was after hours into this morning. Market into tomorrow and Thursday is insanely hedged. We are just loaded. The market is loaded with puts into volatility, expected volatility, and news into tomorrow. I'm going to move this stuff over so you guys can see it in time here. So weakness into from 11:30 into 12:35. We had weakness. Bulls taking over once again from 12:30 into the 1:30 hour. We'll see if the Bears can take back over at 1:30 and try to get some resolution to the up or downside. I was thinking even now, I'm like, man, I just want to leave. I'll be honest with you. In the past, you know what I've done is when I get caught like this, I'll leave calls and puts on, and I literally walk away with a sell on both sides of them, and they just close one in the money to both in the money, and go golfing or something during the daytime. So otherwise, pure nonsense. I mean, the opening price, right? We are just above our opening price in the day, like cash market price right now.
That's 1 minute now.
Sitting on our opening price, not the pre-market price, 4 a.m. price. We're down on the day, but in cash market price, we're right at fucking zero, baby. Like in hand grenades and horseshoes, we're at basically zero right now. So just a hedge sitting on the market from the sell side, and they have not taken this hedge off. So we'll see if we can get a squeeze out of this. If we can get an upside move, I'm going to take the money on the call side. If we get a major downside move into the close, I'll take the money off the put side. Let's see you guys are in the chat right now. Yeah, I'm in a straddle on the market right now, 0 date straddle. Same as yesterday.
Treasury when issued 3-year yield 3.723% before the $40 billion auction.
This stream is sponsored by To The Tick. Get free
Yeah, Waddles, the market maker, wants to collect. I agree.
market profile levels by
So I'll end up cutting one side off or the other. What was crazy was I'm making money on the top and bottom side. Like up here, I'm making money. Down here, I'm up, but it's like 3 cents, 8 cents. Not like, 60 cents, 75 cents, $1.50, anything like that. And I'm looking for a break. Like I'm looking for a break below or above. I don't care where we break. But I'm not looking for any of this nonsense in the middle. I don't give a fuck about it. I just care about a big explosive move to the upside, a big explosive move to the downside. Any of that stuff right there, and I'm in the money. So all this middle of the road stuff, all this like ripping up and ripping down, that kind of noise, it's just a matter of time at this point.
UN grain initiative.
Yeah, I'm just waiting for a move. We had that same move yesterday. We got a move yesterday I believe we got a move to the downside later in the day, and then we got a move to the upside at the end of the day. So I don't care. I don't care if we come down here, blast down here, then come up here, something like that. Yesterday too, I think I had like 4 or 5 trades, but my first 2 trades of the day, I think I closed one for profit, and then I closed one at a loss. And I left both of those on earlier in the day. It was like a 400%, 300% print on one side and 400% print on the other. I would have been making filthy money. So I'm going to stay inside of this straddle. And unless they pin this, I mean, this is where I lose money, is right in here. If you're doing that kind of nonsense, I'm going to lose money. And I was just talking to a buddy on the phone, and part of our conversation was about the hedging on tomorrow and Thursday. Yeah, you know what it looks like to me? I was just talking to him, and I was like, this market's so fucking hedged that any dips tomorrow and Thursday should be bought like fierce. So I'm looking for Wednesday and Thursday to be a dip buyer, personally. Like a major dip buyer.
Bids cover 2 to 93, 2 to 93, and a high yield of 3.695%, 3.695%. So the US selling $40 billion of 3-year notes and awards 67.23% of bids at high. So primary dealers taking 12.99%, direct taking 13.66%, and indirect taking 73.35%.
Yeah, so if we're weakened, like, so if we have any weakness tomorrow and Thursday, even if it's for like a Friday rip faces off rally, like it's here. I can see it.
3.695% versus the 3.723% pre-sale when issued yield.
But talk about wasting a day. Like my buddy's on a boat right now. He's like, I'm getting on the boat right now, and I'm like, dude, I wish I could fucking be there right now, fucking just sailing right now, because like this is basically 2 wasted days. Like I could have just fucked off to a 4-day weekend, come back on for Wednesday and Thursday, and we got vol at 4 p.m. too. Today we have vol at 4 p.m. We got something with the we got something going on at 4 with, I don't know if it's Yellen or something at 4 p.m. today. Let's see if I can find it. I don't remember what it was. Yeah, it says White House. Well, I don't know. It says Biden to meet with congressional leaders on debt ceiling as default looms. More garbage with this debt ceiling shit. Yeah, right here. Biden McCarthy to start U.S. debt ceiling talk as clock ticks to default. I'd fucking love to see a default. I'd bet $1 million fucking dollars to anyone out there that we default, that we never do. I'd bet millions. I bet Vegas wouldn't even take that bet. They might take it for like I don't know, 0.001%. However, they're taking someone else's money to pay me and themselves. Yeah, the debt ceiling, the manufactured volatility, the grandstanding by politicians. I'll read something to you about it. U.S. President Joe Biden and top Republican lawmakers will declare their positions. This is so fucked up. I can't believe this is even real. I can't even say it with a straight face. I'm trying to keep a straight face right now because I know that it means nothing. U.S. Joe Biden and top Republican lawmakers will declare their positions face to face on Tuesday on raising the $31.4 trillion U.S. debt ceiling with an unprecedented default looming in 3 weeks if Congress does not act. Ahead of the 4 p.m. Eastern Standard Time Oval Office session, there were no signs that either side would immediately agree to any concessions that would head off a default as early as June 1. Economists that can't be taken seriously warned that a lengthy default could send the U.S. economy into a deep recession with soaring unemployment while destabilizing the global financial system that's built on U.S. bonds. Investors are bracing for impact. Horseshit. I can't believe it. World markets hunkered down as U.S. debt ceiling looms. The Democratic president is calling on lawmakers to raise the federal government's self-imposed borrowing limit without conditions. Republican House of Representatives Speaker Kevin McCarthy has said that his chamber will not approve any deal that does not cut spending to address a growing budget deficit. Past debt ceiling fights have typically ended with a hastily arranged. I like this. Past debt ceiling fights have typically ended with a hastily arranged agreement in the final hours of negotiations. You mean all of them, right? Thus avoiding a default. In 2011, the scramble prompted a downgrade of the country's top-notch credit rating. Veterans of that battle warn that the current situation is even riskier because political divides have widened. Tuesday's meeting was likely to be the start of an increasingly fraught period marked by uncertainty, i.e. manufactured volatility. White House Press Secretary KRE Jean-Pierre told reporters on Monday that Biden plans to say at that meeting, it's Congress's congressional duty to act to prevent default. The president is going to be very clear about that. McCarthy, whose party holds the House only by a slim majority, wants to tie a vote on the debt ceiling to broad spending cuts the White House considers draconian. On Tuesday, he appeared to close the door to one short-term solution to the problem, saying he opposed the deal that would lift the debt ceiling through September to allow more time for an agreement with the Democrats on spending. No, McCarthy said, when asked by reporters if he would agree to align the debt ceiling with the budget process should Biden propose such an idea. McCarthy added, he's got to stop ignoring problems and why continue to kick the can down the road. Let's solve it now. Oh, man, I can't read the rest of this shit to you guys. It's all diarrhea. It's all like political. Oh, wait, we got they threw Yellen in here, too. On Treasury Secretary Yellen on Monday said a failure to raise the debt limit would cause a huge hit to the U.S. economy, would weaken the dollar as the world's reserve currency. And she's kind of required. It's part of her. It is part of her mandate to tell people that. Let me see. Let me go through the rest of this. So anyways, the debt ceiling. I'm sure that this discussion will, like whenever this is solved, they can do temporary spending increases, stuff like that. But it always gets solved. So the market is completely hedged for it to not be solved. Yes, we can sell the market down to the depths of hell over this.
So that's through to December in the retaliation, apologies, for Western restrictions, which include a price cap imposed by the group of 7 industrialized nations. Yet, so far, crude flows from ports have shown little evidence of output cuts.
Countries go to war over this stuff. Like we would go to war over lesser. If you were trying to destabilize the dollar, we'd probably invade you. So we know that this is political kabuki. We know that the market, though, can react negatively. That is important to us. So we do have that coming up today at 4 p.m. You'll see grandstanding after the close. They'll likely drag this out as long as possible. That's the one thing here is what's really going on in the background is twofold. And how it impacts the market is twofold. They'll drag it out as long as they possibly can so that they make a lot of money and you get fucked. And it adds volatility to the market that doesn't have any. You can see the VIX is low. We need volatility in the market, so you create volatility with things like this, right? With events like this. So how does it matter or impact you as an investor or trader? The only thing you can do is hedge it. And when you hedge it, you have to be very savvy with hedging it because if it's ever resolved or when it's resolved, the market is going to rip some faces off, right? So if it gets resolved today, market's going to blast. If it gets resolved in June 1st, the market's going to blast. If it gets resolved, they do a spending package for 3 months and they want to revisit in September, it's more vol. So
and credit and capital.
But you can't seriously be someone that thinks that, we're going to destabilize the dollar as the world currency and we're going to be Mad Max in New York in the next 3 weeks. Like any of that kind of talk or nonsense. If anyone's telling you that, stop following them. Like, just don't, unless it's for entertainment purposes only, then fuck yeah, you can follow them. If you got to feed the need for like a nuclear war or, I don't know, aliens invading or some kind of shit like that, have at it. But don't be serious with me or anyone else about that actually happening. That's all I got to say on the topic of this. We get some volatility at the end of the day today. We got volatility on Wednesday and Thursday. Market's quite well hedged for it. Maybe we'll hit your number, but they're going to burn the fuck out of you before we get there. You're surely not going to print it to like, $20 or something.
Are interested.
So my point here is even if there is volatility from the meeting at 4 p.m. and we go down, it's not going to be like the end of the world. It's probably going to be a buyable dip at some point too.
Tick strike allows you to actually hit.
Oh man, I got to talk so that it doesn't say the tick strike stuff, so we can kind of mute the guy in the background from the news squawk. Yeah, like they're all dramatic. I don't care if they're Democrats or Republicans. Like, I'm trying to read this story with a straight face, and like you guys understand that these, like, I think some of you out there probably have a lot of experience with people in power with money, but I think that the majority of people out there, are like, I know rich people and powerful people, but you know them when their role facing towards you is they're your CEO or they're your boss, but you don't know them privately. When you know these people privately, I know there's a segment of our viewership that does know these people privately, not just like politicians, but people with power and real money, like real money, millions, billions sometimes. When you know them in another context, they're fucking scumbags. Like, they don't care what their party is. They don't care if they're Democrats or Republicans. They're like powerful, ruthless, money-hungry whores. And they feed into their base. They're gonna feed into their base. Like, if you're a Republican, they're gonna tell you what you want to hear. If you're a Democrat, they're gonna tell you what you want to hear. If you're, I don't know, an outsider populist Republican, that guy's going to do the same thing. Same with the Democrats, right? An outside populist Democrat's going to feed into that. It's very rare that those people are not monsters behind closed doors. It's very rare that they're not, like, you might be like, oh yeah, this person's not a sellout. You wait 20, 30 years, they become that eventually. In our system, in our country, these people are monsters, man. They're just looking for how to make money. Like, you'll see these politicians probably make a ton of money off this debt ceiling once you find out what their trades were through this whole entire thing. They'll just like come out like skating clean and be wealthy and rich over this, right? And they're not the world's best traders. These are dumb. Like, mostly these people are fucking dumb. If you meet a politician right before they become famous, they're usually dirty, dumb people, especially politicians. My father was a lobbyist for a long time, so we would have politicians over on Sundays at my house. And I don't tell you guys a bunch of stuff, but and I have family members right now so that some of you know are politicians. They're actually elected officials in our country, in my family, and and you know, a lot of these people are like, they're regular people like you, right? They're not like they're just regular people like you that get power and fame and money, and you think they're rock stars, but then you meet them on a Sunday and they're like, this guy's a pig. You know, you're like, in real life, this guy's a pig. He's just trying to get power and influence and money. So I don't know, like, as far as it goes with like the Main Street hat, we don't talk about that here in the show, but I want you to know, if you're a trader and investor, that they're there to fuck you over, and they're here to fuck you over in the market as well, and make as much money off of this as possible.
So the White House says the short-term debt limit extension is not our plan.
It's so true. I go out to like Burning Man, right? And you've got millionaires just running around naked. They're all doing drugs. They're all like, you go to like the really like the billionaire clubs, right? You go to these camps, these they call them what are they called? Plug and play camps. You go in there, right? It's insane. You know, they're all hanging out. They're hanging out with the oil barons. The tech bros are hanging out with the oil barons. The politicians are there. They're behind a closed like they got a bunch of trailers and stuff, and they got like tents, not tents, but like I don't know, glamping shit. They got like slaves working for them. Like they're behind a closed door. These people are monsters. I want you to know that. Like, these people are fucking monsters. like even if you were making $1 million a year, you've got nothing on what these people have and how they actually live behind a closed door. Yeah, like, separate those hats. And I'm fine with you having a hat. Like, if you like get a Main Street hat, like I'm a Democrat or I'm a Republican, that's fine. But like, in terms of the stock market, take that hat off, put on your stockbroker hat, and know that these sorry, I shouldn't say that word. You know that these people are straight scumbags. Like, when you put the trader hat on, you're like, oh yeah, I don't trust any of them. I'm flat today, just like the spy. Flatter than a witch's nipple or titty. It really is. It's so eye-opening too. Like, you know, like when I was young, I went through all my, like, I'm this and I'm that and I'm this and I'm that. And then when you get enough exposure in the stock market, like, I never knew when I was a kid, right? Like, did you guys ever have this like epiphany? Like, when I was young, I'd read a news story, right? And I'd be like, yeah, exactly, yeah. And then I became an adult in this market. And now when I read a news, you know where it's glaring? I go to like Reddit, and Reddit will post a story and not realize a bunch of stuff. They won't realize that Reuters is a huge news organization that has articles planted for specifically the audience of the stock market. So someone will post a story from Reuters, and they'll be like, yeah, look at this. This is crazy. And no one is discussing why that article was actually made. And that article was made for the kabuki theater of the stock market. And so I'm always fascinated, because I'm like, this is a regular person who thinks that a lot of politics has to do with a cause. And not all, but a lot of politics, there's a section of politics that is directly related to the stock market. And this is one of them. Like, this is one of them. Like, the debt ceiling is geared towards our stock market. That's what it's geared towards. It's geared towards making money. And, you know, you see people discussing it, and you're like, ooh, these people. I'm not talking about you and I'm talking about people that have no idea that this is all geared towards the stock market. That's what it's geared towards. The stock. It's gross. It's absolutely gross. Reuters, I know it's Reuters. I say, and when I say NVIDIA too, and then I say Abin B or something like that too. I do this intentionally, if you didn't already know that. Yeah, it's gross, man. Like you read these. So before you're a market participant, before you go to school for economics, and you're working at a firm or something like that, you read these stories and you don't have the idea of the context of a lot of this news. And then once you're involved in the market, you're like, oh yeah, that's not directed towards this isn't directed towards Bob on Main Street. This is directed towards market participants. This is directed towards commodities traders, directed towards bond traders and the stock market traders and currency traders. This has nothing to do with anything real. And what's fascinating about it is these stories go away once they're resolved, quote unquote. You know, and then we're on to the next story. And then you'll never hear about the debt ceiling again. Like the debt ceiling just like kind of fades away. And then a new story comes in. Yeah, wag the dog for context, exactly. Yeah, I was kind of bummed out. I wanted Palantir to sell off yesterday so that it would I wanted Palantir to sell the depths of hell so I could buy some of it, so I missed it. I bought some stuff though this morning. I made 2 buys this morning, so I'm happy with myself. Not much, just 10 of each. So I bought some PayPal, and I bought some chicken tendies stock this morning I'm trying to build a position for a long period for the next 5-10 years, so I can sell puts on it down the road in a couple of years. Yeah, I bought the chicken tendy company, and I bought PayPal. So maybe PayPal will pay me finally. Tyson. I bought was it Tyson? I think I bought this morning. I think it's TSN. I bought them this morning for a whole bunch of reasons, but I'll buy them all the way down to $10. Like just the way that I buy stocks is like this. So someone asked me on Twitter about this. Well, so maybe we'll go over that. So let's look at Tyson. Give me a second here. I'll explain my. I don't like catching knives. Like normally I don't catch knives. So I try to buy spec growth that's trending up for good reason, right? So we'll go over this. Sometimes I go over this, sometimes I don't. But if you are trying to catch a knife, this is kind of it's very simple, easy way to catch a knife. Hold on, break, be right back. Some of that over there. Tyson's a good one. So let's pause it. Let's pause it. Let's make a posit. Like let's make a hold on a second. I got something weird going on. Let's make a posit here. So I am going to posit to you that in the next 5 to 10 years, we're going to look back and it's not going to matter where we are right now. This market is built to go up. Like I'm going to posit some things. This market is built to go up. The S&P 500 is built to go up. Now, if I were to just buy the S&P 500, looking back in 5 or 10 years, I'll likely be making some money. Now, as we're cycling down in the S&P 500, some tickers are going to make it and some aren't. As a matter of fact, I bought the underlying of FRC. I started with calls, made a bunch of money, got out. Then I bought underlying at $12 and change. It went down to $6. I added to my position, and then I got stopped out. But I lost them a lot of money in that. But even so, I'm going to buy, as we're selling off in this business cycle, We know that we're at the tail end of selling off financials, and we're going to move into commercial real estate next. And if I buy 10 of these regional banks or financials that are getting destroyed, probably 3 of them will pay out. 3 might go to zero. 3 might pay out, 3 might do okay. So over like 10 stocks over the next 5 or 10 years, I'll look back and forget about the FRC loss and be like, wow, Schwab has gone up a ton, right? And I don't care about it anymore. A similar time like this is when we're in the .com crash. You know, you might have lost pets.com or Petco, whatever the fuck it was, but you sure as hell, if you'd added Apple into that, you'd be fucking rich right now. So you're spreading out the risk, and you're looking for companies that are on a bottom or bottoming or are going to be here down the road, right? So start to think about, like, is Tyson chicken tenders going anywhere? Probably not. Everyone wants Mountain. Like when you're a teenage boy and you're playing video games, you drink Mountain Dew and you eat chicken tenders. So Tyson Foods going bankrupt? Highly unlikely. As we're in this bear cycle, right? This recession cycle, we're going to clip stocks. We're going to have companies go bankrupt. We're going to have individual tickers get weeded out, and we're going to have some that never come back. A lot of spec growth never comes back. But while we're here, and on specific tickers we get max bearishness, this is the time for you to be a stock picker. That's my posit. This is the time for you to be looking around and saying, like, this year, last year, this year, next year, the year after, you have to look. If you want to be a long-time participant in this market, you might have $1,000 today. This conversation might not be for you. But if you've made money in this market and you're like, hey, I'm looking for the next decade, you have to start looking at individual companies and saying, yeah, I'm going to make the next step. You know, I don't day trade every day. I do spreads, right? Big spreads on oversold conditions. I used to own a ton of stock. So as we cycle, you know, a day doesn't matter, but like a year, 5 years does. You know, and here, like if you're looking at a chart that's 5 or 10 years from today, and I'm trying to look for companies right now when they're on lows so that in 5 or 10 years they come back to life, so that I can sell puts and calls against them, so that I can be wealthy, so I can make money. Does that make sense? So I can make the next step. Not only do I own homes, but now I can own a sailboat and sail around the world. I don't have to work. I can retire. I don't have to worry about if I get sick and my insurance doesn't cover my leg being needed to be cut off, or my, you know, like anything. My kids get into trouble. My daughter finds out she has a disease that needs a huge infusion of cash. My grandkids need something. So I have to start looking at companies, me specifically, have to start looking at companies to accumulate. And I'm looking at Tyson Foods and I'm like, will Tyson Foods be here in 10 years? Likely. And I was asked this morning on Twitter, why would you buy them? They just had a horrible guidance. I read their guidance. They were horrible in their pork and beef. They were great on their chicken and some other crap that they're selling. I know that Tyson sucks. I don't like Tyson as a company. My Main Street hat, can't stand him. My trader hat, an investor hat, says, when I was a kid, there was Tyson, right? So like when I'm an old man, there'll probably be Tyson. When you're an old man, you'll probably see Tyson still slinging chicken nuggets or dino nuggets, plant-based nuggets, I don't know, bug nuggets, whatever they are. They'll be trying to sling something like that. Or they'll merge in an M&A. Like that name is probably not going away. Even if they were to go to the depths of hell, some other company is going to acquire them and rebrand it someday down the road. Likely, not guaranteed. There's always risk. You can't tell me not to take any risk. That's why I'm here. Put risk on. Get wealthy. So if I'm looking at Tyson Foods,
will stay focused on avoiding a default on U.S. debt.
and I'm looking at Tyson Foods over, I don't know, let's look at weeklies.
Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
You know, back here, right now, this is, ready? You ready for this? This is January 2016. This is January 2019. This is April 2020. Right now, this is June 2023. And when I look back even further in time, it's only gone up. So if Tyson Foods is up here, or up here, or up here, or up here, I'm going to tell you what I normally get for DMs in text messages, tweets, cacophony of noise on social media, in the news, in the newspaper. You know what I hear when we're here? Buy. Buy Tyson Foods. Amazing. Buy it. Why aren't you buying Tyson Foods? You should be buying Tyson Foods, going to the moon. Buy. You know what I hear when we're down here? Dude, why are you buying Tyson Foods? New York Times, Tyson Foods losing market share on beef. Tyson Foods, horrible. Haven't seen this since the 2008 crash. Tyson Foods hasn't been this low since the last market crash. I'm like, well, shit, that's good. I'm like, that's what I want to hear. I want to hear Tyson Foods hasn't been this low since the 2008 crash. That's what I want to fucking hear. I want to buy Tyson Foods, and it can't get any more bearish. And I got to do my due diligence. Like, I got to go read. I'm reading everything from Tyson, and I'm like, they did great. Like, they lost a bunch of market share on beef and pork. Okay, I get that. Habits and tastes are changing. I get that. Yeah, we get some inflationary concerns. I get that. I think that Jay Powell eventually is going to, try to fight inflation until they accept it, or they're going to raise what they're going to pay people. Maybe some mix of that down the road. So, Tyson Foods probably has a good chance to come back. The name brand's pretty good. It's like Mountain Dew or Pepsi or something. And then, but I do get asked right now, why would you buy them? I'm like, if I had to buy this versus Peloton, I think this is a better risk to buy Tyson Foods, believe it or not. Now, I won't let my kids eat that shit, and I don't eat that shit. But my trader hat is like, yeah, I want to be an owner down here. Do I want to be an owner up here? Fuck no. Do I want to sell puts down here on Tyson Foods for 10 or 15 years? All day long. All day long. I want to be the guy that you come back to in 10 years and you go, remember that guy, JimJames? He bought that Tyson Foods down there. He was buying it at $50. He was buying it at 45. He was buying it at 30. He was buying it at 20. He was buying it at 10. He just kept scooping it up. So yeah, if you're down here at $50, and if you're down here at 35 or 40 and 30 and 10 and 20, even 20, and I can get 100-pack of Tyson Foods down here, sweet. If it bounces right here at 50, we never even go down there, and I'm just at 10. I'm grateful I have 10. But if I can secure 100 shares of Tyson Foods down here, I'm all in. And why would I ever want to be buying Tyson Foods when all it is positive news up here? That'd be insane to buy Tyson Foods when everyone's praising Tyson Foods. Tyson Foods making inroads. Everybody's at home. They got their kids at home, so they're all buying chicken nuggies and chicken tendies. So, just down here, where do you want to be a buyer is the question. Do you want to be a buyer down here? Or do you want to be a buyer up here? You answer me that. And, like a day trade, I have the day trader hat where I day trade, but if I'm going to be like wealthy and retire, if I'm going to be old and you're my grandkid, you want to hear that I bought Tyson Foods down here. Trust me. And if we ever got down to like $10 on Tyson Foods and I own 100 of them, I'll probably add 500 of them down there. So Tyson Foods. Now, this isn't pretty spec growth. It's not going to be my whole portfolio, but like when Tyson Foods is selling off and PayPal's selling off, when like Google sells off or Apple sells off, anything that's like a blue chip part of the fabric of the United States of America, yeah, I'll probably buy it. And if out of those 10 stocks that I buy, 1 or 2 burn, it's not going to matter. I already know. I'm old enough to remember '08. I'm old enough to remember 2000. I'm old enough to remember my dad when I was a kid, and he ended up selling a bunch of properties, and he never should have. I know what they're worth today. So these are opportunities for me to accumulate wealth. This is an opportunity for me, instead of spending $5,000 on pissing it away on a vacation, I know I can spend $5,000 on this, and I probably get a better return than pissing it away on some vacation somewhere. So for me, at least, yeah, Tyson Foods. Tyson Foods. So that's the answer. I got asked that question this morning. Why would you buy Tyson here? I'm like, it's not even a question. And your job, even if you had like 10 grand, even if you had $10,000 to your name, and you could, if you could just step back from the market right now with 10 grand and just say, I'm going to stop day trading. I'm going to find 10 tickers that I know will be here in 10 or 15 years. This is your time to do it. It's not when they're on highs. You don't want to be accumulating Tyson Foods when we're on highs. Like, your whole job right now is to watch these companies get hammered to zero or near zero or on lows, historical lows, and then decide, hey, is this company going to be here in 10 or 15 years? And if I'm looking at Piton versus Tyson, I bet Tyson outlasts Piton. And I bet those 10 picks that I make, they're probably going to be here in 10 or 15 years. No, I talked about Palantir yesterday. It's the same. My conversation about Palantir yesterday was buy lows. Every dip that you see in Palantir, you buy. Every time you see Palantir down at $5-6, you buy it. You buy it. You accumulate it. And you hold it for 10. That's if your thesis is they're going to do something. See, my view on Palantir is that probably not for another 20 years. Unless they do something for civilians. Unless they do like a civilian needful thing, like I have to have this. They're military stuff in my view, because I'm an ex-soldier. I think they're like at least 20 years away from any reality of what they're showing. They have some videos out there recently of products they're trying to push on the military. And from my experience in the military, for what they're saying it will be, like the promises that they're making, it's likely decades away, 1 to 2 decades. And if you don't get the growth story from them, it's hard for them to get the growth story because they don't have a civilian product, like a needful thing. It's hard for them to catch that lightning. Like, ooh, I want to have a Tesla. Ooh, I want to have an Apple iPhone. That kind of stuff. No, you're welcome, Chris. Thesis on PayPal, same thing. I know, like, you got to remember, like, if you're an investor, like, I fucking hate PayPal. I, like, with a passion, hate PayPal. Can't stand them. Do I think they're a major player? Yes. When I hear the news, like, they're not, like, I read the news about PayPal. Oh, they're losing this and they're losing that. That's all bullshit. That's all bullshit. That's just all bullshit to me. People use PayPal all day long. They use it, and as a matter of fact, I don't know if you'll see the integration in like these fiefdoms they're creating on social media. but a whole ton of social media stuff is done right now with PayPal still. Maybe it's a merger and acquisition, but I don't think it goes away. I don't think it goes bankrupt. If it's a merger and an acquisition, all the better. I'll make even more money. You know, so that's the thing is, if you're like, if you know, it's crazy too, because when you've been through a couple cycles, if you've never been through a real cycle, I don't mean COVID. If you've been through a real cycle, if you haven't been through a real cycle, it's a real challenge to understand these concepts. You can understand them, but until you, I'm just going to say something in stream right now. There's probably at least, even if you're a bear, because even bears will go long the market when they get the right price, they'll go long. But if you're a bear, I'm going to promise something to you. 30 people in this stream right now, 30 of you, are going to remember this conversation in 10 years. And I promise you, no, I mean, sorry, not 30 people, like 30 people that have never traded or invested through a stock market cycle. In 10 years, we remember this conversation and say, I remember this guy told me this and I didn't listen to him. And I want to kick myself now for it. And then you're going to go through the next cycle and you're going to remember this conversation. I promise you. And you will not make that mistake twice. You'll make it once. It's going to cost you 10 to 15 years. And then your second cycle, the 30-year part of that cycle for you, you'll catch on. Yeah. Tyson Foods, man. No brainer. And I think it can go lower, but I don't care. Just accumulate a position, start selling puts on it for life. No brainer. I mean, you can sell puts once we go back into an uptrend in the market. You're talking about selling puts for like 5 years. It's gonna be awesome. That's what people with money do, right? You own the S&P 500, you own a Vanguard, and you just sell shit. Sell calls, sell puts. If you own about 1 to 3 to right now, right now it's probably $3 to $5 million, but $1 to $5 million in Vanguard or SPY, you don't have to ever work again, ever, rest of your life. Yes, that's my take on that stuff, like accumulation. I don't think you do it with all companies. I'm always scared of this, too. I'm scared of repricing on some big names. There is some repricing events where you're going to get caught. There are companies that go to zero, and you're going to get caught. So my recommendation is always spread the risk. And if that company goes up and you get left behind, like if I only get left with 100 shares of Tyson, I wasn't able to get the actual 500. I'm just grateful that I'm making money then, right? I can't lose here. I either make money on lesser investment, or it goes down and I buy the 500 and I start making money at that point. And then just spread the risk around a bunch of blue chips. And say, is this company going to make it? I think Tyson has a good chance of making it. They make chicken tenders, man. They make chicken tenders. Yes, it's not glamorous. And you don't have, yeah, Soylent Green, it is. And you don't have to pick Tyson either. But I do recommend to you, if this is your first real cycle, you haven't been through a cycle, and you want to catch some cycle lows, and I wouldn't have any like expectation, like, oh, I'm expecting this to print right now. I'd have the expectation of this is going to take time. You can pick dividend companies. You can pick companies that you think will just cycle back up again. Hey, look at this market here, dude. Gnarly. Look at this right here. Ping pong, ping pong, ping pong. Tastes just like chicken. Well, you kind of know. You kind of know some things never go away. They're always there. Like Coca-Cola, chicken nuggets. Budweiser's always there. You know, you're probably 150 years old and there'll be a Budweiser in front of you. Yeah, I was interested in the bond trade for this summer until I was interested in the bond trade this summer until they saved the what do you call it? Once they saved the regional banks, I see them begging for TLT to go up on CNBC. Rich people. And then I saw the Berkshire Hathaway bullshit. That's more begging. I expect nothing less from those guys. They're like, we're long bonds. I'm like, I know you are. I see all the filthy rich guys on CNBC begging for bonds to go up every week. I know you're long bonds. We all know. We've told this all a million times. You want TLT to print, we get it. Fed Chair Powell just told you no. We know what you want. We got it. We heard you. Do I think bonds print though? Like that big print that they're looking for? So they're looking for what they were looking for was buy the dips all spring and summer. And then like end of summer, early fall, bonds will go to like fucking $175, $180 or something insane. You know, $200 or something. That's what they wanted. That's the implication that long, and that's the thing with bonds, right? You're gonna have to sit in it and stare at it. So yeah, I'm on the bond trade. Maybe if it goes to like $80-$90 or something, comes back down to like $90 or $98, $89, somewhere in there. Start to shake out some of these fat old white rich guys, and maybe I'll buy them then. I like the trade though. It's been a good trade this year. The bond trade has been pretty good. It's been nice and like back and forth. We made videos on that shit, right? This beginning of the year, where like the long bond trade's gonna be awesome. It's been pretty good. It's been consistently up and down. I wonder if someone's long bonds right now, if they're like, gosh darn it, we're gonna go back to $98, aren't we? Yeah, Jill, $98. I'll buy it down there. 90, 80, somewhere in there. I'm down. I'll take that trade with you. It's gonna keep doing that likely, or it'll likely go up and down, up and down, up and down, and through the summer until they decide. All you want to be is long bonds at 80 or 90. If the market starts to crash, it's gonna rip faces off, and you just hold. You'll know when it's happening, not to sell. Yeah. Oh, they're crispy too. They're angry. They want bonds to print bad. You can see it and smell it. They're angry. Buffett's angry. Buffett wants $200 on TLT, guaranteed. That's what he wants. Yeah, Tyson Foods. And that Tyson Foods thing applies to most stocks. Now, the one thing I'll say about Tyson Foods, if you didn't want to buy Tyson Foods there is a way to look when to buy Tyson, like a more managed approach to it and when to buy it. You can look for it to consolidate, begin to trade sideways, begin to prove itself that you're not catching a knife. But for me right now, where I am at in the market, I'm fine with setting alerts and adding to that position over time, and I'm not overly concerned with it. Like I'm not like aggressively watching Tyson Foods. So if it like they had a big nice dump the other day, it's like, yeah, it's in there. It's like in there. I can start a position here. I don't need to time Tyson Foods perfectly or anything like that. When I'm an old man, I will, I guess. If I'm like sitting on a boat somewhere, I'll be like, yeah, I'm going to start watching Tyson Foods every day. I'm going to check on it on Sundays. Open up the newspaper and look. But, throw some money at it. Yeah, I'm on, I've got long calls. I got calls for end of June or July right now on IWM. About some like 50-cent calls or something like that. So I'm still sitting on those. I had somebody send me a text today. They were buying they're averaged into $15 puts. I was like, oh, oof. Like just naked for like May and June. I'm like, you're insane. I'm gonna rob you. Squeezing higher now. Making money on the call side right now. Just needed to squeeze, baby. Squeeze or sell under the bell. I don't care. Squeeze, make me some money. If we can squeeze and then roll, I'll be a happy man. Or if we just squeeze to the top, I'll be stoked too. Now 34 cents on the 412s. Please like and subscribe to these videos. Consider supporting the stream. We have a stream. We've got a Discord. See if I can. All this costs time and money. If you want to support the stream directly instead of through Streamlabs, let's see if I can get a link.
This stream is sponsored by TickStrike.
Yeah, they don't sponsor me, by the way.
Order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Yeah, so like that applies even if you're a sell side of this market or a bear or something like that. You speak to a bear behind closed doors, like a long-time market participant, they'll be like, "Yeah, I buy it when it gets down." Like I was talking about, I made a mistake this year. I bought Tesla at $100, $130, and I sold it at can't remember. It was 117 or 18 or something like that, or 217. But I I messed up. I should have just held. I'm angry at myself over that trade. I'm very disappointed. I should have bought it at 100 and then DCA'd if we get down to $60. So I'm kind of pissed at myself for that. I broke my rule. I should have just held it. I'm frustrated at that. So if we ever get back down there to 100, if we ever retest 100 or 60, I think I'm buying and never selling it again. Well, not never again, but for like 5-10 years or something. I'm kind of pissy at myself at that. Trading 38 cents on 412Cs right now. I need more move than that. It's not enough for me. Trading above the 1 and the 5 minute right now. We've got a gap above at 411.94 and 411.99. That should be our next target, right where my cursor is right here. And then after we should reject off this because we haven't touched it yet today. Maybe we can get up here and tag this pivot above. And I'm still in both sides right now. Looks like the 5 minutes above the 60 on Snap on the 5 minute. Snap's getting bullish right now. SNAP. Come on, green balls, baby. Close the gap on the pre-market high, please. Close the gap on the pre-market. Return to the scene of crime over here. Got the pre-market high right here. Got a little bit of a gap right here that it needs to be filled up. Get the scene of the crime above right here. TLT. So TLT. So the idea behind this is that whenever the market does eventually crash, usually when you right now not always. Well, let's just start at the beginning. Not every single time historically have we had a capitulation like we're expecting. That's the no landing situation. Now I'm not going to argue if that's real or not real. I don't care if it's real or not real. I don't care at all. Price matters on that as well. But TLT, if we get that moment, that capitulation moment, should go to the moon. Now, I don't know if that moment, I think everyone was anticipating it to be this year. And possibly in the fall or January of 2024. And dude, the moment that they said we're supporting the regional banks and that we're going to support other industries as well as failures happen as we tighten, the gig was up on any expectation of that happening like right now. If they're going to be supportive of markets while they tighten, you're talking about kicking the can down the road. So does that TLT trade still matter? It does, but like you see people on CNBC, like you'll see like these, who owns this stuff, and they're on CNBC like raging about it. You just saw Munger this week doing it. You just saw the good old the Wonder Twins are angry about it. They're like, we're buying more bonds. We're going all cash. They're probably already long bonds, and they're angry that they're not gonna. get paid. They will get paid. It's just being pushed off right now. It's a good trade, though. Oh. Ooh. A little bit of squeeziness right now into the gap that was left behind. It's the 1 minute right now. Go back to the 5 minute. Bull cross coming up right now for the bulls, getting very bullish here. Sellers run over right here. Here is the bull cross to the upside. Heading to the pivot right now. An even larger gap to close up here. I'm about to take some money off here in just a few minutes. Sellers on the 15-minute getting run straight over back here. Squeezing higher. Still have gap to close between 412.51 and 412.18. Right where my cursor is where the first gap was on the 1 minute. That gap is a little bit more left to go. You can see it up here. See this little bit of gap right here? Still hasn't been closed. Tiny bit needs to be closed right here. Some more supply to the upside. You can see it to the right of my screen right here. When you see those orange and yellow lines, it shows standing orders for buy and sell. Price will seek out the stronger orders on the up and down side. They act as levels of resistance and support. When you see red balls, those are sellers. Green balls are buyers, and the size of the ball means we have less sellers than buyers or more sellers than buyers. The one thing just crossed over the other thing. I'm reading what you're saying, Winky. Yeah, 1 minute cross right here. Boom with the cross. Checked it. Now we're going higher. 3 trigger cluster on the hourly trigger. 1 5-minute hourly trigger. See if we can do a resting bitch face right here and make our way higher. So right in here, we'll look for some consolidation. See if we can take this one out up here. I don't see a lot of liquidity above that 415, though. Let me see if there's any liquidity up there. Not a whole bunch up there, is there? Like top right there, it looks like. And I'm going golfing today, so I'm going to probably exit the stream early today. I'll be back with you tomorrow. No. So inside, so you have sellers and buyers as we go up and down. You know, does that make sense? I've traded uranium in the past. I like trading uranium. Yeah, it's kind of funny, like, that you bring up uranium because you've got people that are like, why would you buy Tyson Foods? That's gross. I should ask people, do you buy uranium? Because that's like modern day slavery shit right there. Like, ICE engine should go to the depths of hell. Well, do you own uranium? Yes, I do. Not that I don't particularly trade internal combustion engines. I know there's some need for them. I'm like more of I'm very practical with stuff. Yeah. I posted. I didn't know that it was as bad as it is. I thought it wasn't as bad as it is, and then I started going down the rabbit hole on it, and I'm like, shoot. I'm like, then they fake a bunch of it, like where they're sourcing it, they fake. They fake they'll say, oh, it's all coming out of Australia, but it's not, or Canada, but it's not. It's all bullshit. It's coming from like death squads. With they don't even know, they don't, like OSHA. Forget OSHA. 6-year-olds, you know, just gross. You have to find the link to that article. I used to have it. I used to post it a long time ago. It's really cool. Like
to the target soon.
it was a white paper that I had. I think it came from some company. This came from, I got it in like 2018 or 17 or something. And I went looking for it recently and I couldn't find it. I'm going to look again. It's a really cool white paper. And it just talks about, in depth, it talks about how they're structured. Now, puts aren't the same as shorting or selling, you know, but puts specifically. Like I'm more of a fan of like selling futures, future contracts. If you're gonna buy puts, I think it's better. They're better in general on SPX, not SPY. Like SPY specifically, I'm not really as much of a fan of them. They are a cheap way to hedge underlying positions on SPY. And when they move, they pay really well. But like calls specifically on cash market, I think are the best vehicle personally. Like trading the SPY, I like SPY calls.
Allow us to assess the steps taken.
Or like Apple calls, stuff like that. SPY specifically, though. Jared, I'll try to get it for you, brother. It's because of how they're built, too, basically. They're not built the same. As a matter of fact, right, I bought a 20 Delta put at the close yesterday, and I made 100% in that trade. Had that been a 20 Delta call, I would have, on the open this morning, I would have made 300%, 250, 300%. It would have cost me less, too. Yeah, Dash is cranking again, huh? I heard Snap is cranking, too. Snap was pretty bullish earlier when I was looking at it. Retesting the 5-minute right now on the 27 EMA and the 5-minute chart. Or Price is testing the 27 EMA on the 5-minute chart. We'll see if bulls are still in charge for another leg higher right now. So we can get some face ripping going off. Zero hedge pumping uranium squeeze again. Is that what's going on? I don't mind. I haven't been looking at uranium recently, so it's not like I'm anti-uranium. Just being at streaming now, I don't have a lot of time to spend. I'm spending so many hours streaming and getting ready for the day with you guys that I don't have as much time. I would recommend that you speak to someone in the Discord about it. That trades metals right now actively. I think Joe Donut might be trading it actively, or is like up to date and current on uranium. And I think I got a friend on our circle of friends that Joe Donut's in. He trades uranium, but I haven't been trading it, so I'm not going to comment on it. Yeah, I'm waiting for the close here. I need a bigger move. That's not a big enough move. Like, this isn't cutting it for me. I need like the test on the 1 minute and blasting up here for it to at least be worth what I did today. If not, I'll end up being. I think I'll be at zero today. Outside of the selling the puts on the open for monetization, like my opening trade or closing a trade on the open, will put me up on the day. But I'll be 50. I'll be flat on any of the trades I've taken today if we move up here into this 412, 413. I'll have like no opening and closing trades in the day. I wouldn't trade this. That's the other thing too. On a day like today, I would have closed here, and I didn't even want to stream today. I texted Winky this morning, and I was like, yeah, I want to put the stream up, and I'm not going to take any trades today. We have no interest in trading this. And here I am hoping that one side of this trade will just make me flat. Yeah, everyone's trading CL. I like trading CL. Matt Qual is checking on OSCR right now. Yeah, exactly, Chase. I got no interest in it. Like, none. Market hedge the tits right now. I was going through the options complex yesterday, and I was like, you got to be shitting me. I was so pissed off. I was like, it's like, fuck. And today, dude, Chase, today was your best day to bloodbath it. Like, today had the least. Like, today was your day to do it. Like, I was like, maybe you'll get a move today. We got the move this morning before the open. It was nice to see that. I'm like, yeah, I'll take the money and run. And then I'm like, I was like, these fucking guys. Like, all I wanted to see is like a bloodbath. So I was like, I want to see a bloodbath on Tuesday, and then sideways and rip higher on Wednesday, Thursday. I mean, you need some really bad fucking news. Like, what kind of news are you expecting? We had rotation yesterday too. We didn't have selling yesterday. Did you guys notice the rotation trade yesterday? Like, all day long, it wasn't even selling. It was just rotation. Like, I was watching a bunch of stuff yesterday in the market, and I'm like, these fucking people aren't even selling. They're just rotating right now. They're hedging the market and rotating. And you saw it today, this morning. Financial Juice said we're still super high greed right now. Like, there's no fear. There's no fear created yesterday. It was just rotation and hedge the market. It reminds me of summer, man. We're almost in those summer months. This is when it becomes like let the market open up becomes a key thing in the summertime.
Bowl reporter on Twitter, House Speaker McCarthy says the need the debt limit deal in principle by next week. So just repeat that there. So House Speaker McCarthy says we need the
Like in the summertime, man, you'll just let the market open up. You'll take 1-2 trades and you'll be out.
So House Speaker McCarthy saying we need the debt limit deal in principle by next week.
Nah. No, they can do an extension. They can do an extension right into the fall if they want to. That's not true either. That's more bullshit. I'm calling bullshit. Yeah, dude. Chase knows about this stuff. Chase knows it's all bullshit. Yeah, these people, these like ultra conservatives, I'm like they should arrest these guys for treason at some point if it ever came to that. Straight treason. I was talking to a buddy last week or something, and I was like, I'm sure there's an obscure law where you'd arrest people over that stuff. Almost guaranteed there is. There's like some deep blue state stuff that like not Democrat, like deep state stuff that it's like the War Production Act and stuff like that. You just declare martial law and start arresting people. People are like, my rights. I'm like, no, they can suspend those whenever they want. I remember at 9/11, I had never held a loaded weapon in this country. I held one that morning. Like it was no big deal. We broke all kinds of laws.
Tick Strike allows you to actually hear order flow in futures, forex, and
not a whisper.
Get a free trial at tickstrike.com.
It's the same as when they shut us down for COVID. People are like, they're not going to shut us down. I'm like, yes, they are. It's like, I'm telling you they are. Well, they shut us down. My rights, I'm like, your rights are going right out the fucking window right now. Yeah, I'm hoping for an unclinch on like the Thursday of OPEX, Chase. I'm hoping that's so I won't say this on stream, but right around Thursday of OPEX, brother.
Sufficiently restrictive rates in 25 basis point steps.
Yeah, I got stuck. I went through some chemical training once. And when I was in the Army, I went through some chemical training. And I remember when I pulled my kids out of school, and I was in U.S. Army Command, so kind of I sat in a lot of meetings about that stuff like that. And I remember going to my school, and I like started the process where I asked the school if they had a plan, and they didn't. School was like, I don't know what you're talking about. So then I went to the district about it. And the district was like, we have nothing. And then I removed my kids from the school before they were shutting schools down or anything down. I just took them out, put them into online school. There was no lines, no rush. There was no like you can't get your kid into. So I want you to know there's like online schools for military people that travel around a lot around the world and stuff. Navy people, Air Force people, and before there was a mad rush for online schools, we got into one of them. Like legitimate online school. People that work at, sometimes you go to American schools in other countries and stuff. But anyways, if you like sailing around the world, that kind of stuff, there's schools for people that do this. So we got into one of those schools. But it was crazy because as I pulled the kids out of school, they thought I was crazy. And I was like, look, I said it one time, and I didn't say it to anyone else afterwards. But at that time, I was like, look, I was in the military. I was like, and what they're doing right now reminds me a lot of the protocols that I saw when I was in the military.
Credit tightening.
I was like, they're going to shut this fucking country down.
Some credit tightening goes beyond Fed's rate hike.
That's what they're going to do.
It says it's hard to know how tight.
It's like no matter what, and they did. It was like 2 or 3 weeks later.
It says, I won't speculate about how the Fed would manage a default, and says the US debt default would be deeply profound.
My school was then talking about it, and then I
don't have concerns about the overall banking system. It says US debt default impact would be deeply profound. Just to repeat there.
Yawn.
Feds Williams says monetary policy focused on the economy. Other Fed tools deal with financial stability. Commercial real estate valuations may be understate pressure in sector.
Yeah, we know about that already too, right? We already talked about that ad nauseum about commercial banking. Or not commercial banking, commercial real estate.
Williams says, I won't speculate how Fed would navigate a debt ceiling breach, and says, I am seeing signs of tighter credit conditions affecting the economy.
Yeah, so that was going on, man. It was crazy. It was like, I ended up getting an email from my school, my children's school, apologizing. Weeks later, I was like, too late, buddy. Now, whether it's real or not, that's something I can argue that. I just know, I knew that they were going to shut the schools down. Pivots right up here. And they sure as shit did. No, this isn't Williams. This is just garbage, political shit. You're going to get shit talking after the close today. You're going to get grandstanding. You're going to get just nonsense. The things you're going to get volatility in the market from this, but it's going to impact the market. It's manufactured, though, is the point. You're going to see a lot of political grandstanding is what you're going to see. The market can go down hundreds of points over this. Yeah, I don't have any concerns. Oh, this is Williams. I guess he is still speaking. I don't have any concerns about the overall banking system. U.S. debt default impact would be deeply profound. I didn't know Williams. I thought that was McCarthy speaking. It is Williams. Oh, God. You know who said it best? Was Jerome Powell. At the rate increase meeting, he was like, "Get out of my face with those stupid questions." I have the same take as Jerome Powell on any discussion on this. Yeah, he is talking. Can the market go down over it? Yeah, fuck yeah, it can. It's just manufactured volatility. That's all it is. Do you guys have do you guys understand what would happen if You guys understand what would happen? Like, you're talking Mad Max. I'm not joking. Like Mad Max. Like real Mad Max. That's why it's not a discussion. It's the kind of stuff that you go to war over. You literally go to war over this stuff. I mean, like World War III kind of stuff. Oh, and I was this morning. I discussed it this morning. In previous streams, I've discussed it. That there is no discussion. It's basically political grandstanding. How does that vol impact the market? But don't ever bring up I don't ever want to discuss can it happen? It can't. It never will. Even the ultra conservatives, they'll probably arrest those people if it ever came to that. Yeah, I think it's going to be pinned as well. I'm probably going to wrap this up here in a second. It's 2:26. I have a golf outing I'm going to here. So what I'm going to do is I'm going to leave the live stream on and start getting ready for golf today. I've done this before with you guys. I'm going to leave the live stream up for you guys. I'm going to get ready to go golfing. We're going to briefly go over what to expect tomorrow. Now at 4 p.m. today tomorrow we got CPI. PPI has meant a lot more than CPI recently. There's good news, bad news, good news. They're telegraphing too that inflation is coming down. What does that mean? I don't think it means much. I think that the market is on pause on rates right now. I think you're going to see a spike in inflation. There's a bunch of stuff. I think we've got the volatility from this bullshit today. The way the options market is positioned, we should print a low tomorrow or Thursday, but not before they burn those puts to zero. Like if they were worth $5 on Monday, they're probably going to be worth like 50 cents when they print. It's overly hedged. The market is so hedged. The moment that this vol comes off Wednesday and Thursday, we're going to get a nice fat squeeze. I don't think anything that they can say tomorrow, I don't care what happens tomorrow, to be honest with you. Debt ceiling stuff I care about more. Good old-fashioned selling is something that can happen as well. The daily is kind of overbought. They're rotating. It looks more like we're just rotating. Month of May is a rotating month. Month of May typically closes up, too, if you didn't know that. S&P 500 just turned green, right? The other day on the month. So we normally close up on this month, too. We're getting salty here. It's the 9th of May. So I'm going to expect dips to be bought. Now, this debt ceiling stuff, we talked about hedging with some ratio spreads. So I'm flattened tomorrow. And what does it mean? What does CPI mean? I think PPI means more. They'll call it whatever they're going to call it. It's that nothing's changed for me here. So I guess some of you here can claim, we have an expanding wedge or whatever it is. If that's the case, then we're going up next, right? Looks like it, doesn't it? We already had our down move. We already had our up move. We already had our down move. The move is higher, believe it or not. I know you don't believe that, but it is. Like traditional charting. But for me, at least, I love buying dips down here. Buy a dip, buy a dip. If we get weakness tomorrow or Thursday, buy a dip is my point, right? And once this vol rolls off, you know, you got tonight, tomorrow, and Thursday. And the moment this vol rolls off, talking about getting squeezy in here. You know, even if we have doom and gloom on the report tomorrow, it's just another opportunity to buy the dip, believe it or not. So I'm flat into tomorrow. The move is to the upside, believe it or not. And this market is so hedged. It's hedged into June 26th. You know, it's kind of no man's land in here, right? It's like no man's land in here. But anytime you make a sigma move outside of the expected range, you know what to do, right? Buy some puts, buy some puts, buy some puts, buy some calls, buy some calls, buy some calls. If we get out of this range, we'll talk about selling the market. But
$2.39 a gallon. NYMEX gasoline June futures
same as yesterday.
And 48 cents a gallon. NYMEX WTI crude June futures settle at $73.71 a barrel. That's up 55 cents or 0.75%.
And if anything, the move is higher, believe it or not. Like just looking at it, it's like the move is here. So you better put it on tomorrow, Southside Bears. Better put it on. You need some magic tomorrow. And even if you do get the magic and you go down, it's probably going to get bought. I don't think that CPI and PPI is going to turn into like this down here. You need, well, there's two things you got. You got the debt ceiling that could do it, and the one that no one talks about. We've been talking about it here for, months now, right? Keep your eyes on, we knew that regional, like they weren't talking about regional banks, and then all of a sudden everybody knew what regional banks were, it was. And the next cycle is commercial real estate. So I'm hoping that if you're a bear for like that big summer dip, you're either going to get it from the debt ceiling, but you got Yellen out there talking too much, can't shut her mouth. No one's talking about the commercial bank or commercial real estate. There is commercial real estate stuff, but
and market profile levels by signing up at tothetick.com.
I mean, it's out there, but it's not like on CNBC and CNN. Senate hearings. So that might be your summer volatility. Like if you're looking for like that summer vol moment, if you want, like, what is it? It's probably commercial real estate. We already know about the debt ceiling. And your last one would possibly be some kind of a mass casualty event in Ukraine and Russia. If they can start really going to war this summer, that could help too. But other than that, I don't know, man. Looks like manufactured vol so we can go higher. That's what it looks like. The move is still up, too. Look at this. You need something like this. And even when you get this, what does that mean? Like you get underneath here and then you go here? Even then, like, what is that? Right now it's 392, 396, right? Start another cycle on the way up for the rest of summer. Just another opportunity to buy a dip. It's either here or it's there. And right now, this looks like if you don't get your vol, we're going to 430. And I can assure you that there's money on the sidelines buying this shit. You buy this 3 times, and one of them is going to pay a ton of money to you. So, if this one don't work. You got 3 more chances. Man, I want that dip so bad. I want this one down here so bad. It's a great run, dude. Look at that. It's a beautiful run right there. Gorgeous run. Sexy. Hold on, I gotta make a phone call. All right, so I'm gonna let you guys go. I'm gonna leave the stream up for you guys. Please like and subscribe to these videos. Please consider supporting the stream. Buyer down here, a seller up here, buyer down there. We know it, right? If I'm a seller up here, take the money and run. If we go squeeze up and start consolidating, I'm a buyer once again. Other than that, we're trading dog shit in the middle of the market, doing bullshit, nothing. Here comes the cross right now. 3 trigger cluster to the upside. Bullish 3 trigger cluster on the SPY. I'll check back with you guys when I'm heading out. Remember me on the course today. I'll be drinking a beer. I'll think about all of you when I'm out there. What's my take on tomorrow? You want what I think's going to happen? I'll tell you what I think's going to happen. I'll give you my take on the rest of today. Someone said pin the close. I think we squeeze up and catch the vol from the talks that are going on in the debt ceiling. You're going to get a ton of rhetoric. And we're gonna trade down into tomorrow into 8:30 a.m. and then we're going to squeeze higher. There you go. You want a path for tomorrow? I'm going to give it to you. Here's your path for tomorrow. Now, don't hold me to this. I'm like, oh, Cap said this. I charted something for somebody once. Someone came on stream and was like, can you chart this ticker for me? I'm like, yeah, you play is dead down below here. Play stays alive. We go up there. This is your support. This is your resistance. And someone was like, you called this ticker, bro, and you're wrong. And I was like, that isn't my ticker. I was like, I charted it out for you. I guess I'm getting famous if someone comes in and asks me to chart something out for them. And then I'm like, yeah, he called this right here. So expected path. Go up into this bullshit close. You hear we close the gap. You hear the diarrhea from somebody at 4 p.m. You're going to get news from CNBC about, futures traders, waiting CPI, bloodbath down here. Come back up tomorrow for the other. Come back up tomorrow for the PPI, and then maybe we get the final bloodbath on PPI. That's the likely trade. If we pin this, more garbage down there, so be it. Just as good. I don't care. It's more garbage. If we do bloodbath it into Thursday, though, I'd be stoked because we can buy a dip on Friday. If we get that volatility up there into Thursday, it'd be just like last Friday. Let it rip, baby. And we'll print the hell out of Friday. We'll do like 70 points to the upside or something stupid. I've been playing golf this year, so I'm doing much better this year. Like I've been practiced. My swing this year is gangster. My swing is good. This year my short game has sucked. I'm not being patient. Green's a kind of dog shit too early season. Yeah, I'll see all you guys tomorrow. I got to make a quick phone call. I got to get in touch with Winky, and I'm going to go golfing and stuff like that. All right. You guys have a great day today. You guys all have a great afternoon. I'll catch you guys all tomorrow, baby.
And Brent crude futures, they're settling at $77.44 a barrel. That's up 43 cents or spot 56% on the session.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So just keep in mind, Republican Senator Mitch McConnell currently on the Senate floor. This is ahead of Biden's meeting with Congress on the debt ceiling, happening at the closing bell around 4 p.m. Eastern Time. So we're looking now to the early market on close imbalance, currently sitting at 123 million to the buy side.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
So we're looking again now to the early market on close imbalance, still sitting at 123 million to the buy side.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So looking again now to the early market on close imbalance, still sitting at 123 million to the buy side. So we're looking now to the market on close imbalance, currently sitting at 840 million to the sell side, just waiting for the final orders. So the market on close imbalance settling at 824 million to sell. Market on close imbalance for the NYSE, 824 million to the sell side. So just as a reminder, at the top of the hour, at the time of the closing bell today, Biden is due to start his meeting with Congress regarding the debt ceiling. So this meeting will be taking place in the Oval Office, so there'll be no media coverage of the event itself, of course. However, we will just be waiting for comments from reporters after this event.